Hey, Dirt Stink, welcome. Finally, a nice green day on our radar. Hello, Marcos. How you guys doing today? Hey, Void, welcome. How's the brewing going? Sarah Kiara, wow, is that a girl on my YouTube? You're one of 3. Yeah, I wouldn't miss this one, guys. This is probably one of the bigger days that we're going to have in 2022, I think, because this is when the Fed is going to tell us how many times they're going to raise rates and what their target rate is for inflation and for rates. So I think that's kind of what put us in a tough spot when it comes to the market so far this year, is that the market doesn't have enough clarity on what stocks are going to do. And Jerome Powell, I think he's going to come forward, and as long as he provides us with some clarity, just gives us an answer, I think we'll be in great shape. All right, so let's check out how my portfolio is looking. It's green for the first time in like all month. Hey, let me know in the comments. My air just kicked on. Let me know if that's bothersome in the background, that background noise. But we finally got a good day. Hey, Competent Man, thank you very much for the super chat. Oh, where's my money gun? I got to get that out. Jerome Powell should be coming live at about 2:30. So we're going to hang tight and listen to what he has to say. All right, Competent Man, thank you very much for the super chat. Money all around. We'll pollute my battle station here with some extra cash. Yeah, the air just picked up, so let me know, guys, if the air is bothersome on the sound. But can't hear the air? Okay. All right, so let's check out the portfolio. Now, I think a lot of people over this year so far, the last 26 days and then the very, very end of December, realize that their risk tolerance is not as high as they thought it was. And you talk to a lot of people, they say that they're long-term investors, so they just invest in these short-term positions and call them long-term. Things like AMC, like GameStop, Palantir, these were all plays. Right, but a lot of people, they say, hey, if the stock drops, I'll just buy more, I'll hang on longer. And then what happens? They all freak out and they start dumping their positions the second they turn red. So I always I like to, as much as I can, keep my portfolio in some kind of balance where I know that if things drop, I do have the risk tolerance to hold on. And when you're playing things like short-term meme stocks, you won't have it. So a lot of people got shaken out. What I've got here, all right, so Apple, it's taken it in the teeth lately, not as bad as the rest of the market, but I've got a lot of shares and I'm just holding on to them, not selling covered calls. Coinbase has probably been my worst investment ever. I think if I did all the math, I'd be down like 20,000, 25,000. One stock I really like now, I think you guys should get on these two, Coca-Cola and Energy Transfer. Not exactly sexy stocks, but Energy Transfer is probably in the best position it has ever been in as a company. So I think that'll work out really well if we jump on that one. Cabbage Eat asked me why I stopped doing the Dankest Trade series. So I didn't stop it. I'm actually in the middle of doing one right now. I stopped making that video in order to stream this. So the Dankest Trade series is not dead by any means. I've got a couple of them coming. So one recommendation, I want to see what the Federal Reserve should have put out its minutes in the last couple of minutes. So we'll go and check those out. But a stock I want you guys to keep an eye on aftermarket is Lam Research, LRCX. So this company makes the machines that other companies need to produce semiconductors. So I think there's going to be a lot of semiconductor push in the next year, in the next decade really. So LRCX, great way to go. They've got earnings this afternoon. Honestly, I might even close out now and take my $54 gain on this covered call because I think that they could go to the moon. They're probably not going up $100, but we'll see. And then my strangle here getting blown the fuck out. Big loss on this strangle. $9,000 loss on the put side. All right, did I lose you guys completely? You're back? Okay, cool. Yeah, I don't know why that happens. I even upgraded my internet and it still sucks. All right, we're back. All right, pseudonym who just spammed me. My thoughts behind Coca-Cola. It's going to raise its dividend every single year without fail. So I'm definitely going to continue buying shares of Coca-Cola. It's my dividend stock. It is my rock. And I was able to stay calm and cool during this whole dip because I had all these stocks underneath me that I knew would be very safe and very strong. Prudential, I've got my SPHD, I've got Coca-Cola, Energy Transfer. Those stocks keep me calm and keep me cool so that I can trade more aggressively on top of it. All right, but let's see. The Federal Reserve, yeah, so they're not quite going live yet. We got Jpow coming live at 2:30, so we'll be ready for him. But let's check. There should be some minutes out here. If anybody just wants to drop the link to that or tell me how to get to it, we'll check out those minutes. But let's see, because it sounds like the Federal Reserve is not raising rates, according to what somebody dropped here in a comment. Let's see what my bank stocks are doing. So I've got XLF to cover the whole financial sector. So it looks like they're up 1.59%, which is pretty good. It's not great, but for a financial sector, that's good. Let's see. Let's go over to the comments real quick. Why not Donkin Dave asks, why not buy leap calls on those stocks that fell below the 200 simple moving average, like Nvidia, Microsoft? I don't buy as many leaps anymore because my risk tolerance doesn't allow it, honestly. Like you can leverage yourself into a large position with leaps, but if you give me the choice between leaps and shares every single time, I'm taking the shares, provided I can afford it. The leaps, when you have a leaps, a stock can go down 10%, your leaps is down 30%. And I know you put a lot less money into it, so dollar-wise, it's really going to be pretty close to the same, or you'll actually have lost more money if you own shares. But in reality, I don't like watching all that red on my calendar or on my portfolio. It makes me very upset. I much prefer to go into shares that I know will be there forever, they don't expire, and I get dividend from them. That's why I prefer those. Daniel Sims, thank you for the super chat. He says, is it smart to keep paying down debt before investing? So if you have debt that's over 4 or 5%, I definitely want to pay that off first before I go into more investing. You should assume that the money that you're putting toward debt would have been invested at a pretty safe rate of maybe 5 or 6% if you invest into a nice dividend ETF, or if you invest into the S&P 500, but markets continue higher like they have been, you can probably count on a good 5 or 6% every year. But if you have if you're gaining 5 or 6% on your investments, but your interest rate is 23% on a credit card, you're losing money by investing in those stocks instead of paying off your debt. So pay off that high interest debt, absolutely. If you have a house that's maybe 3 or 4%, there's no need to go crazy on that unless you just really want to be debt free. So I would go and pay off any high interest debt first, absolutely. Anonymous says, what industry do I work in and what's my day job? Seems like you did really well based on the size of your portfolio. So until recently, I got out of the Army in 2020, and then I was a cartographer for the government until December. I quit the day before my 31st birthday, so I could say that I was self-employed YouTuber by the time I turned 31. So yeah, my income has slowed down a little bit because I don't make as much doing YouTube as I did as a cartographer, but I'm hoping to flip that around. And last question, I'll take a couple more questions right now. Janny asks, if you only have $10,000 to invest, do you recommend buying ETFs or single company stocks? Until you have about $25,000 and you can get around the day trader rule, I would go straight into ETFs. Just buy QQQ or SPY or VOO. That's it. Just go into that. And once you have $25,000, you don't have the, what's it called? The pattern day trader rule anymore. Then you can start trading more aggressively. And then since Anna actually tagged me, she says, sorry if asking something redundant, but do you have a video covering your recent trading strategy? Yeah, look at my most recent couple of videos on YouTube are all from that. So you'll be able to see it. All right, let's check it out. Somebody hooked me up. First Chief or Fire Chief sent me $5. Thank you very much for the super chat. I appreciate you so much. All right, let's look for some of these minutes here. All right, Federal Reserve minutes. They should have published at 2 o'clock. Let's see. Here, 7 minutes ago. Okay, so here's the news from Reuters. Barack Obama, thank you very much for the Canadian money. Thank you so much for that super chat. He says, what would you recommend someone with $300,000 in stocks for a 24-year-old? All right, if you have $300,000 in stocks as a 24-year-old, first, congratulations. You are absolutely killing it. So I would first take half of your money and invest in indexed ETFs. So VOO, or you're in Canada, so figure out how you can invest into indexed ETFs like that. Do that, and that's it. Like you are already for the rest of your life going to be ahead of your peers because you have $150,000 invested into a growth index fund. So do that. With that other $150,000, start looking at opportunities to sell covered calls on things that you really, really like. So I would buy LRCX. I would take that $70,000, drop it, take that's half of your extra $150,000 left over, and start wheeling LRCX. You'll make money off of it. Look at growth stocks that you love, sell premium against it with covered calls or short puts, and then use the money that you get, use those gains to reinvest into something nice and stable, like those indexed ETFs or into dividend stocks. You could probably, if you keep up that pace, I'd say by the time you're 30, you could probably retire and not have to worry about anything else. And Jenny, thank you very much for the super chat. Appreciate you guys. I'll give you a couple more. Thank you guys so much for all these super chats. All right, so let's see. Fed, this is according to Reuters. Fed says U.S. interest rates could raise soon. Okay, I think that was pretty much already known. All right, central bank signals likely to raise rates in March. So I think that's exactly what the market was anticipating. Something like that into the first quarter. Or in the second fiscal year quarter, actually. All right, and Jerome Powell to speak at 2:30. All right, so we've already got it open. We're ready. Federal Reserve said on Wednesday it's likely to increase rates in March and reaffirmed its plans to end its bond purchases that month before launching a significant reduction in asset holdings. All right, it sounds to me like this is pretty much in line of what we wanted. With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise target range for federal funds rate. All right, now let's see if I'm right. I haven't checked the market right now, but it looks like Jerome Powell is saying pretty much exactly what everybody expected. He's satisfied with the way the economy is going. We're going to raise some rates this year. Where is his target? Maybe he'll talk more about that during his actual meeting. Barack Obama, thank you very much again for the more Canadian money. Now I got to figure out how to spend all this Canadian cash. He's 60% in Apple and other big tech stocks. So you're actually not too far off from what I'm doing. I keep most of my holdings in tech stocks. That's why I hold triple Q. Now let's actually look at something while we wait for Jpow. I'll show you guys this. Give me 1 second to set up let me get some privacy while I get my account open. I want to show you what my account actually looks like if you look at the real numbers to it. You can see what my actual holdings are because I have a lot of stuff in, let's do this one, Portfolio X-Ray. So this is really cool from Merrill Lynch. You get a Portfolio X-Ray to see exactly what your account is actually doing. Not what it looks like you're holding as far as shares go, but how much your actual holdings are spread once you factor in all the ETFs. So let me get this set up here. Once it decides to load, and come back to it. Taking a look at the comments. Proper says he's got $13 million at age of 22. All right. You must be a OnlyFans guy or something. Okay, so let's look at my Portfolio X-Ray. We can check this one out while we eagerly await Jpow. But first, Pradeep C19 sent me 5 SGD. I don't know what that is, so you tell me. But thank you for those 5 SGD. in your native currency. Hey, Angel, welcome. I think we're out of the woods. I haven't checked the market, though. I haven't checked yet. I want to see what it... let's give it a minute here. All right, anyway, so this is what my portfolio actually looks like right now. Once we factor in all of the ETFs and things like that, where am I invested geographically, etc. So it looks like I am almost entirely invested in the United States, which is no surprise. I like the US for growth a lot more than the rest of the world, but I do have some international holdings. About 1% of my, or what is this? Long 4% in my portfolio. So that's my VEU. Market is dropping. Oh, great. Okay. Big chicken. Uh-oh. I don't like that. 31 years old, Greg, is how old I am. All right, and I've got a little bit invested outside the United States, but let's look at the sectors. What's going on here? It's messed up. We'll give that a second. Somebody's saying that stocks are dropping. I don't want to hear that. I don't want to hear that, guys. This is what I wanted to see from Jerome Powell. He's describing that the economy is good. It's time to raise some rates. The only thing I could say here is that he backed off a little bit more than I wanted him to from asset purchases. I really wanted to see a more tapered asset purchase rather than stop by March. So I'm a little bit concerned about that. And I think the market might be too if it's dropping right now. But other than that, I think he's saying what I wanted to hear. So I'm a little bit disappointed if the stock market's actually tanking right now. All right. Got the Singapore dollars. Thank you very much, Paddy. Appreciate you. And with the extra super chat. Thank you so much. Short volatility. Okay. Let's see if I can get one more time into the portfolio x-ray. It's not giving me... Looks like the website is having a moment here. Okay. All right. So it's not loaded quite correctly. We're missing some features, but this looks like it works. All right. So most of my portfolio is invested into the cyclicals, and then we have technology down here. 55% of it is invested in growth in the technology sector, which makes sense given how much triple Q and TQQQ I have. But let's see. Annaly Capital. I got to admit, I'm a little bit disappointed that this website is not functioning as anticipated. Portfolio X-ray doesn't seem to be working correctly. All right, we'll come back to that. We've only got a few minutes until Jpow anyway. All right, Barack Obama says, shouldn't buying the largest positions on ETFs be better than buying the ETF itself? The largest position of the ETF will determine its move anyway. Yeah, what you're asking is, instead, if Apple and Tesla are the largest on this particular ETF, shouldn't I just buy those instead of buying the ETF itself? Yeah, you can do that, but remember, there's so many more things that are thrown into an indexed ETF than just the largest ones. So I think on Triple Q, the largest ones, the top 10 are like 25 or 30% of the whole fund. That means you'd be missing out on that 70% of other stocks. And if one of those moons, it would still help out with the rest of the portfolio as well. So don't get too aggressive with the way you're approaching it. I still would go to the indexed ETF, pay the 0.2% fee. It's probably even 0.02% fee, and let somebody manage that whole thing for you. That way you don't have to audit, you don't have to manually go back and adjust when there's a change in the stocks. Let somebody do that. Take your dividends from it. It's a lot easier to do it that way, and it'll keep your portfolio nice and organized. Actual financial advisor. Okay. Jpow starts at 12:30, at 2:30. Yes. All right. I don't want to do it, but I think it's time to look at my portfolio because you guys are scaring me with saying what's about to happen. So let me get my privacy so that I can open up my portfolio without doxing myself. All right. Let's see. All right, today I have learned that you guys have very weird ideas about what tanking means in the market, because I see you guys tell me that the market just tanked and I am up 3.43%. So I don't know what's tanking today. What changed in the last few minutes? All right, Apple, it's just right where it was. Coinbase is just, I don't even want to talk about Coinbase. Energy Transfer is up. Coca-Cola's flat. Lithium, LRCX, flat. Everything's flat. What are you guys talking about? We're tanking. Who's tanking? Triple Q is down like 20 cents from where it was when I started talking. Hey, you guys got some wild ideas. SPY took a dump. So here's where I really have my leaps, is on SPY. So I bought these. This is one of the better purchases I've ever made. I bought SPY 250 calls in June of 2020. So I got pretty darn close to nailing the bottom on that one. The reason I haven't sold these to buy shares yet is because I actually want to execute these when the time comes. December of this year, I'll have an opportunity to buy SPY at $250. That might be my last chance in life to buy SPY at $250. That means I've got to have $75,000 in cash ready to go so that I can buy these. $75,000 by the end of the year. Now, I think I'll be able to do it, but I mean, that might mean not investing in a whole bunch of other things this year just so that I can get that SPY. All right, so SPY took a very small stumble, according to Chris Jones. Fake the breakout, then went back to flat. Puts are tanking. I think it's probably, what's tanking right now is probably volatility. Somebody confirm that one for me. If we have volatility decreasing, I think realistically that's probably where we're seeing the big hit. This was probably a good opportunity to sell options. Now, if I look at my strangle, does it look like I'm in good shape now? No, I'm in absolutely shitty shape. Terrible. Yeah, so this strangle right here, where it looks like I'm down about $9,000, it's less than that because I have rolled several times, but I'm still probably at a $6,000 plus loss on these strangles here. So I need SPY, or I need triple Q rather, to go up above 390 by February 18th. If it doesn't, I'll have to roll again. But I'm definitely not overly concerned about the direction the market's going right now. I think that this is a drop that's going to get picked up. And I think Jpow is going to confirm that in about 8 minutes when he says that they're going to remain vigilant. They're going to continue to use the tools at their disposal and monitor economic data to determine when is the appropriate time to raise rates. I think that's all he's going to say. VIX is down 13% today. All right, that sounds about right. Tristan asked a good question. He says, what do I think about investing into the EU market while US rates are high? Because EU rates will probably be kept low as possible. I don't know. It's interesting. I think the EU, we saw with Turkey that we don't know what Turkey EU? I don't know. What do you want to invest in specifically? Like an ETF that touches on all of Europe? That would be a pretty cool one, but I'm not aware of such an ETF. The way I play international markets is right here with VEU. So this is the Vanguard All World minus the US. So you're investing in all of the developed markets and some emerging markets too without the US. So it's been pretty flat so far. But this negative 1.45% is so much better than the United States, which has gotten rocked. I think it's down still like 14% on triple Q. Turkey is not EU, he says. All right, good. All right, Adam S. says that he's a financial advisor and he's impressed with the advice from the live stream, although I would recommend passive and active management. Yeah, now by that I think you mean you'd hold passively managed ETFs like triple Q, but you'd also actively manage some of the positions. I mean, that's what I do. A lot of people, they try to go all active management. They don't want to hold ETFs. They don't want to hold anything passive. They just want to trade their stocks in and out. And they say often that they're long-term traders and that they have iron hands. They're willing to ride out the ups and downs. I don't actually see that play out. In the times where I did try to manage my portfolio like that, I would screw up. I'd say I'm a long-term trader and I can deal with the ups and downs. I can stomach it. And then once I see my stock drop 10%, I freak out and sell and screw something up. Or I sell a covered call way below where I should be selling it. A lot of people make that mistake. So I don't have the risk tolerance for it. I'm going to be honest. I need to hold these dividend ETFs. I need to hold some low beta, that means low volatility positions, so that I can actively manage confidently and not screw a bunch of things up. Pickle Wickle says, do I think that inflation will be the major driving factor going forward to drive the stock market to insane highs? I've kind of wondered about that. And we have a financial advisor here, so I know he can't give us financial advice, but I bet he's got an answer for us. When we see inflation, shouldn't stocks be rising, not dropping? I mean, the idea would be that the dollar is becoming less valuable. So these stocks should be making more money in a dollar per dollar basis, which would rise up the stock. Now, I understand inflation could have negative effects on the economy overall, which could damage the stock or damage the company. But as far as stocks go, I feel like they should be rising, during an inflationary environment. But anyway. Buck, welcome to the chat. Chainsaw Harry says, why not sell my SPY leaps, buy shares with money from intrinsic value, and then keep the extrinsic value for free? So there's really not a whole lot of extrinsic value left on this thing. Once you start getting into these very, very deep in the money options, the extrinsic value it's negligible. Even on this that doesn't expire for another 11 months, I bet the extrinsic value is like maybe 1.5 or 2%. The delta on this thing is like 99.5. So there's really not much extrinsic value left. The reason I don't want to sell to buy shares is because if I sell this $37,000 gain, I've got to pay, my tax bracket give me like 10% on the long-term position. I've got to give Uncle Sam over $3,000. I'm not trying to do that. I want to execute this thing and never pay taxes on it. Just hold the shares at a really low basis. That's my idea. Why is my title scaring people when I say Jerome Powell saves the bull market? I thought that was a great title. Anyway, all right, we got Jpow in 4 minutes. Let's get started here. I'll turn on the sound just so you guys can see. Let me know if the sound is adequate. I got it on pretty low. But let me know if that sound is catching you guys okay. I'll turn it back down. We got 4 minutes until Jpow goes live. 4 minutes. I've got big hopes for what he's about to tell us. Ellen has a shit ton of SQQQ. I don't know. I bought a couple of SQQQ just for fun. When markets are tanking, one of the ways that I execute self-control is to buy things like a 1 week put for $100. I'll throw $100 at it. All right. If the market continues to go down, I feel great that my short-term put is making me money. And I made $70 this week off of a short-term put. That's a whole share of SPHD and 1 share of QYLD. So I got all that for free. I lost a lot more because my holdings went down. But if I can just snipe a little piece off of it, I feel better. So I trade better. I don't trade out of control. So that's why I bought a put on QQQ, very similar to just buying SQQQ. All right, Mr. Dresley says that inflation equals treasury yield rises, risk of outperform via stock is higher, risk-averse players go into cash bonds, less demand for stock dives. Okay, all right, that makes sense. So what he's saying is that treasury yields rising makes it more attractive for people to invest in bonds versus stocks. So if they don't want to hold the risk of holding a stock for, 2% annual gain, they can just ditch that risk and then buy into treasuries instead and get that risk-free yield. So it's more attractive for them to do that, which sends stocks down. But that's not just inflation. That's also treasury yields rising. So we're assuming that when there's inflation, we have treasury yields rising. We have that here, but do we always have that? I don't know. Maybe we do. I started investing in 2009, so I've only known bull markets, really. Yeah, my expectations for the meeting is that he's going to say that they're going to raise rates several times, but they're going to focus very, very closely on economic data to determine when that time comes. And they'll continue monitoring the market with all tools at their disposal. I don't expect anything particularly exciting to come out from this meeting. Greg the cocaine hooker says his mother watches my videos and says I'm both smart and an idiot at the same time. That's cool. Tell me more, because I'm very interested in that. My mother also watches my videos and tells me that I'm very smart with stocks, but she's very disappointed in me that I was reaching into garbage cans to pull out receipts and scan them for the freeloader challenge, getting cash back on receipts. Do you guys like the freeloader challenge? I want to do more with that. There's a handful of things that I'm trying out now that have been really good. Let me show you. I'm going to punch it in the chat. I've been making like $200 a month off of this. And I'll go there. I'll pin this for a little while. So the freeloader challenge, I've been using userinterviews.com for the freeloader challenge. It's not a referral link. That's just a website. You do focus groups. So companies that want information about how do consumers want to receive music on social media. So they'll go to this website. They will mark it with user interviews. And they pay you to give your opinion. So you apply to it. You apply to 4 of them, you'll get selected for 1. I've been doing about 3 interviews per month, and I'm making pretty consistently about $200 a month. And when you think about what that actually is, that's the equivalent of having $20,000 invested into QYLD, one of the highest yield stocks, highest dividend positions. So do you want $20,000 invested into QYLD, or do you want $200 a month? So from user interviews, I'm doing both, of course. But if you haven't tried that yet, get in on user interviews. You will make money off of it. Here we go. Here's Jpow. You guys see it okay?
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept its policy interest rate near zero and stated its expectation that an increase in this rate would soon be appropriate. The committee also agreed to continue reducing its net asset purchases on the schedule we announced in December, bringing them to an end in early
Let me know.
March.
How's the volume now? I just increased it.
As I will explain, against a backdrop of elevated inflation and a strong labor market, our policy has been adapting to the evolving economic environment, and it will continue to do so. Economic activity expanded at a robust pace last year, reflecting progress on vaccinations and the reopening of the economy. Fiscal and monetary policy support and the healthy financial positions of households and businesses. Indeed, the economy has shown great strength and resilience in the face of the ongoing pandemic.
More loud? Jesus.
The recent sharp rise in COVID cases associated with the Omicron variant will surely weigh on economic growth this quarter. High-frequency indicators point to reduced spending in COVID-sensitive sectors, such as travel and restaurants. And activity more broadly may also be affected, as many workers are unable to report for work because of illness, quarantines, or caregiving needs. Fortunately, health experts are finding that the Omicron variant has not been as virulent as previous strains of the virus, and they expect that cases will drop off rapidly. If the wave passes quickly, the economic effects should as well.
You guys are
and
funny.
we would see a return to strong growth. That said, the implications for the economy remain uncertain, and we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines, the virus continues to cause great hardship. The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid in recent months, averaging 365,000 per month over the past 3 months. Over the past year, payroll employment has risen by 6.4 million jobs. The unemployment rate has declined sharply, falling 2 percentage points over the past 6 months to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics.
African Americans and Hispanics.
Remains historically
I'm not touching the volume anymore. It's like blowing out my
With
speakers right
constraints on
now.
labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years.
Hey, y'all don't pay us enough.
While labor
That's
force
why I quit.
participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements. In addition, some who would otherwise be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus.
I think a lot of that is bullshit. People just like
The
staying
current wave
home.
of the virus may well prolong these effects. Over time, there are good reasons to expect some further improvements in participation and employment. Inflation remains well above our longer-run goal of 2%. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation
Are you
have been
guys staying
predominantly
home because
connected
of
to
the virus?
dislocations
I'm
caused
staying
by the
home because I didn't
pandemic,
like going to work.
price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support
There it
the
is.
economy
He's
and
using
a
the
strong
tools.
labor market,
I knew he was going to say
and to
it.
prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan, announced in December, to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal,
Yeah.
the economy no
Puts
longer
it lightly.
needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we
Scaring me,
expect
Jpow.
will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook remains highly uncertain. Making appropriate monetary policy in this environment requires humility, recognizing that the economy evolves in unexpected ways. We'll need to be nimble so that we can respond to the full range of
The market's
plausible
dropping,
outcomes.
Jpow. Come on.
With this in mind, we will remain attentive to risks, including the risk that high inflation is more persistent than expected.
Tell me that now is the
and
time to
are
buy
prepared
calls,
to
Jpow.
respond as appropriate to achieve our goals. To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify
I don't like
that
it,
the
guys. I
federal
don't like
funds
it.
rate is our primary means of adjusting monetary policy, and that reducing our balance sheet will occur after the process of raising interest rates has begun. Reductions will occur over time in a predictable manner, primarily through
Deep
adjustments
fake
to
Jpow.
reinvestments, so that securities roll off our
Oh,
balance
boy.
sheet. Over time, we intend to hold securities in the amounts needed for our ample reserves operating framework. And in the longer run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals.
Man, it's really
In that
going up and
regard,
down here,
we
huh?
will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet, and we will discuss these matters in upcoming meetings and provide additional information at the
That's
appropriate
why
time.
I was here, Jpow, to hear you tell me that
To
guidance.
conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Oh boy.
We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Yeah, somebody better drop it on this guy.
Thank you. For the first question, we'll go to Chris Rugaber at the Associated Press.
Thanks, Michelle, and thank you, Chair Powell. So it's expected that the Fed will.
You know,
hike
I think this
rates
is what the market
perhaps
thought was going to
every other
happen, but
meeting.
it's the way he said it was
But
kind of concerning.
Certainly in the past, the Fed has hiked at every meeting. So I just wanted to ask, are rate hikes at consecutive meetings on the table this year? Is every meeting a live meeting? And on that note, would the Fed consider front-loading some of its rate hikes, even if it doesn't raise every meeting? Thank you.
Thanks. So as I
Front-loading
as I
rate
referred
hikes.
to in
Please
my
don't do
opening
that.
Statement, it is not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And so at this time, we haven't made any decisions about the path of policy. And I stress again that we'll be humble and nimble. We're going to have to navigate cross currents and actually two-sided risks now. And I'll say also that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the evolving outlook. We'll try to communicate as clearly as possible, moving steadily and transparently. So, more to your question.
Buck, Jesus.
We know that the economy is in a very different place than it was when we began raising rates in 2015. Specifically, the economy is now much stronger. The labor market is far stronger. Inflation is running well above our 2% target, much higher than it was at that time. And these differences are likely to have important implications for the appropriate pace of policy adjustments. Beyond that, we haven't made any decisions.
Okay.
Thank you. Let's go to Victoria Guida at Politico.
Is she the one in red?
Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates,
face.
bring inflation under control without hurting jobs and wages?
She asked a really good question there.
Sorry, just getting both parts of your question written down. So I would say, and this view is widely held on the committee, that both sides of the mandate are calling for us to move steadily away from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And I would say that most FOMC participants agree that labor market conditions are consistent with maximum employment in the sense of the highest level of employment that is consistent with price stability. And that is my personal view. And again, very broad support on the committee for the judgment that it will soon be appropriate to raise the target range for the federal funds rate. The other thing is maximum employment will evolve over time and through the course of the business cycle. In the particular situation we're in now, it may well increase. The level of maximum of employment that's consistent with stable prices may increase, and we hope that it will as more people come back into the labor market, as participation gradually rises. And the policy path that we're broadly
I think he's wrong about that.
Would be supportive of that outcome as well.
I think the participation rate is going to get lower.
The thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job openings, of quits. Wages are moving up at the highest pace they have in decades. If you look at surveys of workers, they find jobs plentiful. Look at surveys of companies, they find workers scarce. And all of those readings are at levels really that we haven't seen in a long time, and in some cases ever. So this is a very, very strong labor market. And my strong sense is that we can move rates up without having to severely undermine it. I also would point out that there are other forces at work this year which should also help bring down inflation. We hope, including improvement on the supply side, which will ultimately come. The timing and pace of that are uncertain, and also fiscal policy is going to be less supportive of growth this year, not of the level of economic activity, but the fiscal impulse to growth will be significantly lower. So there are multiple forces which should be working over the course of the year for inflation to come down. We do realize that the timing and pace of that are highly uncertain, and that inflation has persisted longer than we thought. And of course, we're prepared to use our tools to assure that higher inflation does not become entrenched.
The market dropped as he was answering that question.
Thank you. Let's go to Nick Timrose at the Wall Street
As soon
Journal.
as he said less
Good
growth,
afternoon, Chair
I was
Powell.
like, come on,
Nick Timrose of the Wall Street Journal.
take that back.
I have a couple of questions on the balance sheet. The statement on the balance sheet today calls for significantly reducing your holdings. What does that mean? And then, apart from moving sooner and faster to shrink the holdings, are there any other ways in which you and your colleagues are seriously thinking about recalibrating this process? And finally, how much disagreement is there around how you should use this tool, including active sales rather than passive sales, or changes in the composition of reinvestments? Thank you.
I hardly even understood what he was asking right there.
I'm afraid to tell you that those are all great questions, and they're questions that the committee is just turning to now. So we had a discussion, as you know, at the last meeting, an introductory discussion of the balance sheet and a teeing up of the issues. At this meeting, we've gone through and carefully put together a set of principles at a high level, and those are meant to guide the actual decisions we'll make about the pace and about all of the questions that you're asking. And I expect that this process will be something that we spend time on in coming meetings. I can't tell you how many, I can't tell you how long it will take, but And then, at the appropriate time, we'll provide additional information. So the last cycle when we went through balance sheet issues, we did find that over the course of 2 or 3 meetings, for example, we did come to interesting and better answers, we thought. So we're just in that process now, and at the next meeting, we'll be turning to, more of the details that you're asking about. I would say this: the balance sheet is much bigger. It has a shorter duration.
That's it, guys. The crash is back on.
And the economy is much stronger, and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time, and also perhaps faster. But beyond that, it's really not appropriate for me to speculate exactly what that would be. But I would point you to principle number 1, which is the committee views changes in the target rate for the federal funds rate as its primary means of adjusting the stance of monetary policy. So we do want the federal funds rate, we want to operationalize that, and we want the balance sheet to be declining in a predictable manner, and we want it to be declining primarily by adjusting reinvestments.
So if I could follow on that,
the market is
and reducing the
shitting right
balance
now.
sheet
God
both
dang
restrain the
it,
economy,
man.
both tighten monetary policy. How should we think about the relationship between the two? For example, how much passive
Come on,
runoff
Jerome.
is equal to every 0.25 percentage point increase in your benchmark rate?
So again, we think of the balance sheet as moving in a predictable manner, sort of in the background, and that the active tool meeting to meeting is not both of them, it's the federal funds rate. There are rules of thumbs. I'm reluctant to land on one of them that equate this, but there's also an element of uncertainty around the balance sheet. I think we have a much better sense, frankly, of how rate increases affect financial conditions and hence economic conditions. Balance sheet is
I'm going to have to change the title of this video.
For the markets and for us, so we're less certain about that. So again, I think the pattern we'll follow is to arrive at a timing and a pace and composition and all those things, and then announce that with advance notice, and it will start in the background, and then we'll look to have that just running in the background and have the interest rates again be the active tool of monetary policy. That's at least the plan. I can't tell you much more about any of the very good issues about size, pace, composition, those sorts of things. We'll be turning to all of those at coming meetings.
Dude, as soon as he said lower growth this year, I was like, oh God, he just did
Now we'll go to
it.
Neil
He just
Irwin.
crushed us.
Thank you, Chair Powell. It's Neil Irwin from Axios. Glad to be back. Sir, I was wondering if the volatility we've seen in financial markets in the last few weeks strikes you as anything alarming or that might affect the trajectory of policy. Conversely, to the degree that financial conditions have tightened some, might that be desirable in some ways in achieving your tightening goals?
So, as you know, the ultimate focus that we have is on the real economy, maximum employment and price stability, and financial conditions matter to the extent that they have implications for achieving the dual mandate. And you also know that we look at broader financial conditions, not one or two things, one or two markets. And what we're always asking ourselves is, are we seeing changes that are both persistent and material enough that of a change in financial conditions that they are inconsistent with the achievement of our goals? So that's how we're looking at that. And I don't want to comment on today's financial conditions broadly, but we're not looking at any one market or so. So that's how we're thinking. In terms of
Coinbase is red.
what we've seen,
Dow is red.
I would say this. We said at our last meeting, we published a summary of economic projections, the median participant expected 3 rate increases this year. And, it's 6 weeks, 7 weeks later now. And you have seen that our communication channel with the markets is working. Markets are now pricing in a number of rate increases. Surveys show that market participants are expecting a balance sheet runoff to begin, at the appropriate time, sometime later this year, perhaps. We haven't made that decision yet. So we feel like the communications we have with market participants and with the general public are working, and that financial conditions are reflecting in advance the decisions that we make. And monetary policy works significantly through expectations. So that in and of itself is appropriate.
Start applying to Wendy's, guys. It's getting ugly.
Thank you. Let's go to Howard Schneider.
For a year or hi, thanks, Jpow. Howard Schneider with Reuters. So for a year now, the statements referenced the benchmarks for this initial interest rate increase. Now that we're approaching that moment, what are the benchmarks going to be for subsequent rate increases?
Good question.
You can't stipulate the path, but how should we think about the criteria for the next step and the next step?
Good. Finally, a good question.
Well, you're right. We haven't gotten to that point yet. We haven't made a decision yet, and we'll make that decision at the March meeting. We'll make a decision whether to raise the federal funds rate. I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so. We have our eyes on the risks, particularly around the world, but we do expect some softening in the economy from Omicron, but we think that should be temporary, and we think that the underlying strength of the economy should show through fairly quickly after that.
All eyes are shifting to Tesla for their earnings after market.
Related question. The December SEPs had this copacetic sort of set of circumstances where inflation comes down without the federal funds rate ever getting over the estimate of neutral. Given developments since then, do you still think that's a credible narrative for the ultimate path of policy?
My path is highly uncertain, and that we're committed to using our tools to make sure that inflation, high inflation that we're seeing, does not become entrenched.
Committed to using our tools.
So
there you go.
A number of factors would be, it's not just monetary policy. A number of factors are supporting a decline in inflation, as I mentioned. Fiscal policy will be providing significantly less of an impulse to growth. We do expect this year, although we do expect now that it will come slower than we had expected and hoped, that there will be relief on the supply side. So that too should lower these supply side barriers, which are a big part of the story why inflation is.
He just said it
again. In addition,
again.
monetary policy will be becoming significantly less accommodative. So the question is, we'll be asking this question all year long.
Apple red.
And that will be, are things turning out as we expect? There's a case that for whatever reason the economy slows more and inflation slows more than expected. We'll react to that. If instead we see inflation at a higher level or a more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
I wish he would stop saying that growth will be lessened. Like, figure out a different way to say that, please. Gina?
Let's go to Gina. Okay, let's go to Steve Leisman.
Thank you, Mr. Chairman. Mr. Chairman, I have one sort of technical question and one question on principle. The technical question is, if you're going to discuss balance sheet at next upcoming meetings and you won't begin balance sheet reduction until after you begin rate hikes, it seems to technically mean that you won't.
I'm right there with you, Sarah.
Balance sheet reduction until the summer. Is that correct? That's the first thing. Second of all, you suggested that the with balance sheet running in the background, that you would possibly be raising rates and running off the balance sheet at the same time. That's sort of the technical question part of it. The principal question I have is, you said it's going to be running in the background, but the statement on balance sheet principle says the committee is prepared to adjust any of the details of its approach based on economic and financial developments, which suggests there's something of a reaction function associated to the balance sheet, and it won't be running in the background. So could you give us any a sense of the discussion or staff presentation on what is the reaction function surrounding the balance sheet?
This guy needs a better internet connection. That sounded like trash.
Let me start by talking about that last paragraph. So you'll remember during the last cycle that this process of building up and then shrinking the balance sheet is a complicated one, and it involves inevitably surprises. And so during the years during the prior cycle, we amended our balance sheet principles a number of times. Now, we didn't intend to do that. Events required us to do so. So we got a pretty robust paragraph there that says we're free to do this at any time. And it doesn't mean we're going to, but if the situation turns out to be different than we had thought, we're not going to stick with something that isn't working. That's all that's saying. It's meant to be quite a general statement rather than a hint. So, I mean, I like to think that our philosophy of the balance sheet is embodied in these principles. So, the idea that, for example, the federal funds rate is the primary means of adjusting the stance of policy, that will determine the timing and pace of reducing the size of the balance sheet to foster the dual mandate, that will begin to reduce the size after we begin the process of raising rates, and on like that. I mean, those are all the things that try to describe how we will proceed. But it may be at a higher level to try to get at your question. Asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after in the critical phase of the global
Gina's
financial
supervisor
crisis.
is pissed.
And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this highly accommodative policy that we put in place. So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now, the balance sheet is substantially larger than it needs to be. We've identified the end state as in amounts needed to implement monetary policy efficiently, effectively in the ample reserves regime. So there's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly and predictable. And so those are some of the ways I would think this lays out our, the way we're thinking about this. In terms of the timing, I can't really help you. It just says after we get underway. So I would say we're going to have another discussion at the next meeting, and my guess is we'll have at least one other discussion at the meeting after that, and we'll tell you as we make progress, and we'll start the process of allowing runoff and shrinking the balance sheet at what we find to be the appropriate time. I wish I could say more, but honestly, we haven't made those decisions, and we actually haven't even really had the important discussions on a lot of the details that we will have at coming meetings.
No, I was really hoping that he'd provide more clarity at these things, but so far all he's done is give us less clarity about what's going to happen.
Chair Powell, good afternoon, Michelle and Chair Powell, Craig George from Bloomberg. Chair Powell, at the beginning of the conversation, you said risks are two-sided, and I'm wondering if you can elaborate on what are the risks to the elusive soft landing. Is Fed policy a risk, over tightening, or what are the risks? And then second,
52-week low on Snap.
Administrative question. Robert Kaplan's disclosure of his securities transactions. In a couple months, Chair Powell, or maybe sooner, you and I will file our tax returns and we'll list transactions and all kinds of things. And next to those transactions, we'll put dates. And Bloomberg asked for the dates of Mr. Kaplan's transactions. The Dallas Fed is not giving us the dates. And I don't see why this is a matter for the Inspector General or anybody else. I mean, why can't he give us the dates? Will you help us get the dates of those transactions? Thanks.
So you asked about the risks first. So the one risk is that inflation risks are still to the upside in the views of most FOMC participants, and certainly in my view as well. There's a risk that the high inflation we're seeing will be prolonged, and there's a risk that it will move even higher. So, and we don't think that's the base case, but you ask what the risks are, and we have to be in a position with our monetary policy to address all of the plausible outcomes, and that calls for us to be in position. We have an expectation about the way the economy is going to be evolved, but we've got to be in a position to address different outcomes, including the one where inflation remains higher. And of course, that is a risk to the to the expansion, we've been saying that what we need here is another long expansion, which is the kind of thing we saw over the last, which is the record long expansion. We saw labor force participation rise. We saw wages persistently higher for people at the lower end, and there really was no obvious imbalance in the economy that threatened that expansion. It could have gone on for years were it not hit by the pandemic. So we'd love to find a way to get back to that. That's going to require price stability, and that's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal. So I mentioned two-sided risks. A couple things. One, the COVID is not over.
Thank you, John. Yeah, we'll stay on.
And COVID can continue to evolve, and it's just we have to accept that it's not over, and the risks to it can slow down growth, and that's sort of a downside risk from a growth standpoint. I would point to another risk is just further problems in the supply chains, which could slow down activity. And you see the situation in China as a situation there where that's their no COVID policy.
Yeah, are we short China
may
yet?
Cause more lockdowns, is likely to, and that may play into more problems in supply chains. In addition, there's what's going on in Eastern Europe and things like that. So there's plenty of risk out there.
This freaking guy.
And we can't forget that there are risks on both sides. So that's there. That's what I would say. I know you've been all over this issue with my colleagues, Craig, on the issue of information. We don't have that information at the board, and I asked the Inspector General to do an investigation, and that is out of my hands. I'm playing no role in it. I seek to play no role in it, and I can't help you here today on this issue, and I'm sorry I can't.
Yeah. Okay. I would have been surprised if you did.
Thank you. We'll go to Gina now.
Thanks for taking our questions, Chair Powell, and sorry for my tech issues. I wonder if you could tell us a little bit about where you're thinking on inflation stands today. The last time we saw an SEP back in September, we saw that you and your colleagues were projecting that inflation would sort of sink back down quite close to target by the end of the year. And I wonder if you still think that projection from December is a reasonable one, and if your thinking has changed at all, I wonder how you're thinking about that. And I also wonder if you could talk a little bit about the pathway to getting to that deceleration. Like how do we get from here, 7% CPI, to where you expect to be at the end of the year?
So I'd say, since the December meeting, I would say that the inflation situation is about the same, but probably slightly worse. I'd be inclined to raise my own estimate of 2022 core PCE inflation. Let's just go with that by a few tenths today. But we're not writing down an SEP at this meeting, but I
Jerome.
think it hasn't gotten better. It's probably gotten just a bit worse, and that's been the pattern. So I think if you look at the FOMC participants, there's a range there, and that range has been moving to the right for a year now. And by the way, if you look at other forecasters, essentially all other macro forecasters who do this for a living, you've seen the same pattern. So, what do we think about that? Well, I think we wrote down rate increases in the December meeting, each of us individually, and I think to the extent the situation deteriorates further, our policy will have to address that. I mean, if it deteriorates meaningfully further, either in the time dimension or in the size of the inflation
Jerome is like
dimension.
Titanicing this market.
So that's how we're thinking about it. As I mentioned, though, I think it's part of this will be that the Fed, moving away from a very highly accommodative policy to a substantially less accommodative policy, and then over time to a policy that's not accommodative in time. I don't know when that will be. Those are the things that we're thinking about.
You're killing me, Jerome.
Part of it. Another part of it is that fiscal policy provided an impulse to growth over the last 2 years. That impulse will be less. In fact, will be negative this year, and so that's another thing. The other one is we will eventually get relief on the supply side, and the ports will be cleared up, and there will be semiconductors and things like that Now, what we're learning is it's just taking much longer. So I think longer than expected, and that I think does raise the risk that high inflation will be more persistent. I do think we'll come off of the highs that we saw in the early part of this episode in the spring last year, but really the question is going to be what is inflation running at, and so we'll be watching that. And our objective is to get inflation back down to 2%. It's also to provide enough support to keep the labor market healthy. The labor market is
come watch Jerome tank the market with us,
and I think that strength will continue. There's really a shortage of workers. We see it particularly among production and non-supervisory workers and people in the lowest quartile. You see very large wage increases. I mentioned some of the other indicators. So I think that's what we're looking at, and we're also we realize, I think, as everyone does, that this outlook is quite uncertain, and that we're going to have to adapt, and we're going to communicate as clearly as we can, but we're going to have to be adaptable and move as appropriate.
Great, thank you. Let's go to Colby Smith.
Colby, you better just tell this guy to buy some calls.
Thank you, Michelle. Chair Powell, when you talk about
Colby?
being
Okay.
humble and nimble about the path forward for monetary policy, does that also include the possibility of raising interest rates by larger increments and, say, doing a 50 basis points hike at some point if inflation does not moderate sufficiently? And should we interpret this approach as a departure from the gradual pace that we saw during the last hiking cycle?
So, as I mentioned, we have not made these decisions. We really haven't. And what I can tell you now, though, is that we fully appreciate that this is a different situation. If you look back to where we were in 2015, 16, 17, 18, when we were raising rates, inflation was very close to 2%, even below 2%. Unemployment was not at our estimates of the natural rate, and growth was in the 2 to 3% range. Right now we have inflation running substantially above 2%, and more persistently than we would like. We have growth even in forecasts, even in the somewhat reduced forecasts for 2022. We still see growth substantially higher than what we estimate to be the potential growth rate. And we see a labor market where, by so many measures, it is historically tight. I think in a way, the least tight aspect of it is looking at the unemployment rate, which is still below our median estimate of
Jpow's fucking us up, Surya.
Like quits and job openings, as I mentioned earlier, and wages, you're seeing, and just the ratio of job openings to unemployed, you're seeing a very, very tight labor market. Now, we also know that labor force participation is significantly lower. It's 1.5 percentage points lower than it was in February of 2020.
It's because I quit.
Maybe 1 percentage point of that is retirements. Some part of those retirements are related to COVID rather than just regular retirements. So we think there is a pool of people out there who could come back into the labor force, but it's not happening very quickly, and it may continue to not happen very quickly as long as the pandemic is on. So that's how we think about that. We haven't made, to your specific question, we really have not addressed those questions, and we'll begin to address them as we move into the March meeting and meetings after that.
Jpow is like, I wanted clarity, and instead he's just destroying us. Man.
Let's go to Rachel.
You're really letting me down here, Jpow. Letting me down.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm wondering if you can talk to us about any metrics that the Fed uses to assess how inflation affects different groups of Americans, especially lower income earners. And are you worried that the Fed underestimates or can't effectively measure the impact of inflation on some of the most vulnerable households? Thank you.
So it's more a matter of.
All right, what do you guys think? Scale of 1 to 10. Focus on the eyebrows.
That we're talking about here is really that people who are on fixed incomes who are living paycheck to paycheck. They're spending most or all of what they're earning on food, gasoline, rent, heating, things like that, basic necessities. And so inflation right away forces people like that to make very difficult decisions. So that's really the point. I'm not aware of, inflation literally falling more on different socioeconomic groups. That's not the point. The point is some people are just really prone to suffer more. I mean, for people who are economically well off, inflation isn't good. It's bad. High inflation is bad.
What was the question? I wasn't even paying attention.
To eat and keep their homes and drive their cars and things like that. It's more so that's really how I think of it. And we
Tesla down 40.
Control inflation for the benefit of all Americans. But part of it is just that it's particularly hard on people with fixed incomes and low incomes who spend most of their income on necessities, which are experiencing high inflation now.
Thank you. Let's go to Edward Lawrence.
Devastating.
Thanks, Michelle, and thank you, Mr. Chairman, for taking the question here. So year over year, inflation's at 4-year
Jpow,
high.
are we doing calls or puts? What are we doing here?
Price index for all of 2021 was the highest on record. Some investors fear that the Fed might be moving too late. Now, you said no decisions were made on the path of rate hikes, but was a rate hike more than 25 basis points discussed today? And as a follow to that, because I have problems with the mute button, as a follow to that, you testified that the supply chain issues could be worked out by the end of the year. You talked about that today. The CEO of Ford, though, told Fox Business today that the chip shortage will last into 2023. So today you said inflation will start to ease this year. I want to drill down and get a timeline that you see as to when we could see that relief. Thank you.
He's not going to answer that question.
I would not say that I would expect the supply chain issues to be completely worked out by the end of this year. I do not expect them, and I have not expected them. What I would say, and I have been saying, is that I expect progress to be made in the second half of this year, mainly. Progress, because we're not making much progress. If you look at a ton of metrics, you can find some that suggest that delivery times are shorter and inventories in some industries moving up. But overall, we're not making progress. And things like the semiconductor issue they're going to be quite a long time. I would think they'll go more than through 2023. In terms of being too late, I would just say this: our policy needs to be positioned to address the full range of plausible outcomes, as I said, and particularly the possibility that inflation will continue to run higher more persistently than we'd expected. And we think we are positioned to make the changes in our policy to do that, and we're committed to doing that. And that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them. It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But as we work our way through this meeting by meeting, we are aware that this is a very different expansion, as I've said a couple times, with higher inflation, higher growth, a much stronger economy. And I think those differences are likely to be reflected in the policy that we implement.
Thank you. Let's go to Mike McKee.
I'm like barely even listening anymore because I'm just watching my portfolio bleed out.
Thank you, Mr. Chairman. I'd like to sort of weave some of the strands of your answers together and ask you, as you start to reverse policy, what your goal is. Are you going to be raising interest rates until you get inflation to 2%? Do you want to go below 2% so that on
Finally,
average,
a good question.
you get a 2% inflation rate? And because you said we have to protect the employment part of your mandate, is there some sort of circuit breaker that would stop you from raising interest rates on the employment side?
A good question. Finally.
So no, there's nothing in our framework about having inflation run below 2%. So that we would do that, try to achieve that outcome. So the answer to that is no. What we're trying to do is keep inflation expectations well anchored at 2%. That's always the ultimate goal, and we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. And if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that.
Got to do a little bit better than that, Jpow.
What was the last part of your question?
I was asking if you're protecting the employment side of the mandate, whether there's some sort of circuit breaker there.
Nothing like that. I mean, I would say you have a tremendously strong labor market, and you have growth this year at forecast to be well above potential. I mean,
well above 2%.
Growth. If you think potential growth is around 2, most forecasts are significantly above that for 2022, and that's even with policy becoming substantially less accommodative. So the labor market's going to be strong for some time. Ideally, what we're trying to achieve is inflation getting back down to 2%, and we're trying to do that in a process that it accomplishes that will also leave the labor market in a very strong position. And no one really knows what that will take. Again, I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse in all likelihood.
Don't say less growth.
But monetary policy will do our job. It is our job to get inflation down to 2%, and a situation where the two goals can be in tension is a difficult one. But I don't really think they are here, though, because I think a really significant threat to further strengthening in the labor market in the form of higher participation over time is high inflation. And also, high inflation is taking away the benefits of some of these large wage increases that we're seeing now. Yeah. So we do hope to achieve, and our plan is to achieve both of those goals.
If I could follow up, does the danger of tightening too much as policy works its way into the economy with a lag mean that you should go back to being more forecast dependent in making decisions rather than the state dependency you've been using as a framework for the last year and a half or so?
State dependency was particularly around the thought that if we saw a very strong labor market, we would wait to see actual inflation before we tightened. And so that was a very state dependent thought, because for a long time, we'd been
someone just ring the bell, please.
On the expectation of high inflation, which never appeared. And that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
Well, thanks, Jerome. We said growth slow 4 times.
Let's go to Michael Derby.
Thank you for taking my question. I want to ask you, with the benefit of hindsight, and I realize, that is what it is, but do you feel that monetary policy and fiscal policy maybe did too much to react to the crisis, and that part of the inflation problem that we're having right now is because the government response, collectively was more than what the economy ended up needing?
So I think it's too soon to write that history, really. But what I would say is this. If you remember what it felt like at the beginning of the pandemic, literally the global economy shutting down in large part, including our own economy, and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them. And then you have economic activity drops by a shocking amount in one quarter. So there was a real risk of lasting damage. And I think Congress responded remarkably with the CARES Act, incredibly timely, very powerful. People will always
stonked
be
up.
Welcome to
the shit show.
In real time, it was a remarkable achievement, and we responded. And what we were able to do was, stave off a collapse of the financial system at the beginning and make time for what really needed to happen, which was the income replacement and then the recovery that Congress enabled with the CARES Act. So now that was a lot. And what we did was a lot. And now, what we have now is we have the strongest recovery of any country, and we have a recovery that looks completely unlike other recoveries that we've had, because we've put so much support behind the recovery. And we're managing the relatively high-class problems that come with that, which are high inflation and a labor shortage. So, and these are serious problems, very serious problems that we're working.
And it'll likely slow down growth into 2022.
Was it too much? Again, I'm going to leave that to the historians. But look, in 25 years, we'll look back at this incident, which will be a 2, 3, 4, 5-year period, and we'll say, we'll have a much better basis to make a judgment about the actions that people took. But it was all founded, though, in a very strong reaction to a unique historical event. And I guess I'll have to leave it at that. I hope I'll be around to see how that looks in 25 years.
Fair enough. Thank you.
Thank you. Let's go to Jean Young.
Thanks, Michelle. Chair Powell, some investors are expecting the yield curve could flatten or even invert after rate hikes begin. Would that worry you? And how important is that risk in the Fed's consideration for adjusting policy?
So we do monitor the slope of the yield curve, but we don't control the slope of the yield curve. Many factors influence longer-term interest rates. But it is something that we watch, and you will know that from when we had this issue a few years ago. And we take it into account along with many other financial conditions as we try to assess the implications of all those conditions for the economic outlook. So that's
Stonked Up, thank you for your generous offering.
Currently,
and congratulations on the job.
A slope, if you think about 2s to 10s, 2-year Treasury to 10-year Treasury, I think that's around 75 basis points. That's well within the range of a normal yield curve slope. So it's something we're monitoring. We don't think of it as, I don't think of it as some kind of an iron law, but we do look at it and try to understand the implications and what it's telling us. And it's one of many things that we monitor.
Can I follow up real quick and ask, if it did invert, would you tie it to U.S. fundamentals, or would it be driven by a much broader set of factors?
That's a good question in real time. Obviously, U.S. long-term sovereign debt is an important global asset, and the fact that our rates are so much higher than other risk-free sovereign rates around the world may put something of a ceiling on our rates. I don't know, but it would really depend on the facts and circumstances at that time.
Thank you. Let's go to Brian Chung for the last question.
All right, at least we stopped completely tanking.
Brian Chung, Yahoo Finance. Within the context of just the broad effort to normalize rates, would you describe what you want to do as a gradual hiking? And then secondly, within the context of hiking cycles, it's often the talking point for financial stability and wanting to make sure that asset bubbles don't merge. Is that something that has also factored into the conversation as you start to think about hiking rates? Thanks.
I would describe what we're doing along these lines. This is going to be a year in which we move steadily away from the very highly accommodative monetary policy that we had put in place to deal with the economic effects of the pandemic. And that's going to involve a number of things. It's going to involve, and it does involve, finishing asset purchases. It's going to involve lifting off, and it's going to involve additional rate increases as appropriate. And we're going to write down in March our next assessment of what that might be.
I just want him to say, hey, it's time to buy calls, everybody.
Quite adaptable, I think, in our understanding of this. The last thing we're going to do is we're going to have a couple more meetings, I think, to talk about allowing the balance sheet to begin to run off and do so in a predictable manner. And that's something that we will also be doing as appropriate. And I wouldn't, I don't think it's possible to say exactly how this is going to go. And we're going to need to be, as I've mentioned, nimble about this. And the economy is quite different this time. I've said this several times now. The economy is quite different. It's stronger.
Yeah,
inflation
we've heard
is
that
higher.
before.
The labor market is much stronger than it was, and growth is above trend even this year, let alone last year. So all of those things are going to go into our thinking as we make monetary policy. And you asked about financials. We have concerns in connection with our policy. Was that your question?
Yeah, within the context of other hiking cycles, it seems like worries about asset bubbles emerging as a result of easy rates has been part of that. I didn't know if that was part of the discussion today.
I would just say this. We of course have a financial stability framework, and what it shows is a number of positive aspects of financial stability. But you mentioned really asset prices is one of the four. So asset prices are somewhat elevated, and they reflect a high risk appetite and that sort of thing. I don't really think asset prices themselves represent a significant threat to financial stability, and that's because households are in good shape financially than they have been. Businesses are in good shape financially. Defaults on business loans are low and that kind of thing. The banks are highly capitalized with high liquidity and quite resilient and strong. There are some concerns in the non-bank financial sector around money market funds, although the SEC is has made some very positive proposals there. And we also saw some things in the Treasury market during the acute phase of the crisis, which we're looking at ways to address. But overall, the financial stability vulnerabilities are manageable. I would say.
Oh boy. All right.
Thank you very much.
Thank you.
God, he's killing me. Oh, that's it. All right, guys, that is a wrap. The timing. Now we got music. All right, it's actually very, very good timing on this because I have a meeting at 3:30 I'm going to go to. Now, we have a lot of people that wanted to watch the Tesla earnings release. I can certainly do that, but I've got to take a 15-minute meeting. So do you guys think I should just leave this up and just kill the sound? You guys can like watch Yahoo Finance on the screen or something like that until I come back. But I'll probably just end it right here. Matter of fact, unless there's like an overly like a dramatic number of people telling me to just leave it on so we can watch Tesla together. But at least the bell is only a half hour away from each other, or only a half hour away from now. So I don't know. I'll just put up like finance. You guys can just like look at stocks or something. Just leave it. All right, I'll just leave it up. What do you guys want? Website you want me to put it on? I'm gonna have to kill the sound completely, but stream the meeting. No, I can't stream the meeting. It's with a sponsor, and I think they'd be pretty pissed off at me. God, the market's just tanking right now. All right, leave it. All right, everybody's just saying leave it, leave it, leave it. Short meeting. Okay. All right, I'm gonna leave it on, and then we'll come back and stream the Tesla release. What do you guys want me to turn it to? Like, what do you guys want to watch while I'm doing this meeting? It starts in 3 minutes. You know what you guys could also do? I'm not turning on Pornhub. Whoever just said that. God damn it. You guys are funny. Y'all are funny. Put a screen that says be back in 20 minutes. Pornhub. All right. Pornhub. QQQ chart. Stream Bitcoin. You guys are all over the place with here. You want Tesla, Pornhub. Jim Cramer. Is Jim Cramer on somewhere? I got to kill the volume, though. Remember that. I got to kill volume because I have to kill it for the meeting. Here, let's just do like, is Jim Cramer live? Live on CNBC? Pornhub. Everybody wants to watch Pornhub. I'm not doing that. I'll get demonetized. Kramer. Where can I find Kramer? Like, is he like on right now? I don't watch Kramer. Y'all tell me where to put it on. Next videos. Spy is ripping. Baby Shark, Crackhead Kramer. Kramer on YouTube and Loop. All right, we'll do a Jim Cramer playlist. Benjamin subscription. Yeah, I'm subscribed to Benjamin. What's up? Y'all ain't giving me nothing. Wall Street Millennial. All right, yo, I'm just gonna put up. I'll put up like the SPY chart. All right, it's actually turned around. All right, I'll just refresh the screen every now and then. I'm gonna kill the sound. You guys can bounce. You can come back. Whatever. I'm gonna kill the sound off of all these so I can do this meeting in quietness. Hey, can you guys hear me now? I'm still waiting for this guy to start the meeting, so I'll join back for a couple of minutes here. Hey, while you guys are watching your portfolios bleed out, something I could recommend for you guys is some of the freeloader opportunities I've been using, which would be userinterviews.com that I pinned prior. Just look for user interviews, and you'll find a whole bunch of them. I'm making like $200 a month off of that. And then another one that I absolutely love is Free Cash. I pinned it at the top there. Check that one out. It's a phenomenal website for getting paid in cryptocurrency or in gift cards. So you download some apps, you do a couple little gimmicky things. I've made like $800 off of it, and some of the people that I talk to on Discord, they've made a couple $100 off of it too. I think one guy made like $400 on his first day just downloading some apps and playing games and stuff. So those two are really good, userinterviews.com and then freecash.com. The one that I pinned, that's my referral link. That's an awesome one. Use that. And then add a poll is something I've talked about several times. So when things are getting difficult and your portfolio is down, it helps me a lot to just make an extra couple $100 a month that I can then reinvest at the lower prices. If that helps you too, then by all means do that. And if you can sell plasma, sell plasma. Look for a place near you. I think this is United States specific. I don't think anybody else can do that. So go to, I think CSL Plasma is a good one. CSL Plasma, BioLife, and Biomat, I think, are the three biggest places. You sell your blood plasma, you can make $400 or $500 in a month easily. Even more than that in your first month because they have bonuses. So do those things. Hey, Big Ray said right there, he had his first user interview today, made $60. I wonder if you did the same one I did. I had one today and also got paid $60 as well. So userinterviews.com is a really, really good one. Free Cash is another really, really good one. Gun to my head, if I had to pick one of those two, it would be pretty tough. I think I'd probably pick, oh God, I don't even want to choose between those two kings because I love both of them. But get your money, free or otherwise, and then reinvest it into stocks when things are cheap. So this downward drift right now, I'm buying dividend stocks while the premiums, not the premiums, the yields are nice and high. I'm going to buy some more growth when things start going down. Clinical trials. Search some clinical trials on YouTube, or not on YouTube, on Google, and then you'll suddenly be getting tons of Facebook ads for clinical trials. So as a lot of you guys know, I tried to get malaria for $3,000, but that came up short because I was medically unqualified to get malaria. By the skin of my teeth, I missed it. I was going to be really happy with that. But, Buck, they don't pay difference between vaxxed and pure blood, but they do pay you more if you are producing enough antibodies against coronavirus. So great point. If you have a large number of antibodies, like a particularly large number, then they will actually pay you more money for that plasma. And by like a lot more, I mean like double. They'll pay you a lot more money for it. Yeah, plasma's great. Adipol's great. I'm wondering if this guy's even going to join my meeting here. I'm going to check my email and see. Is he not coming or... What time is it in Germany right now? Because it should be a little after 9:30. 9:37. I think this dude just forgot that we were having this meeting. That sucks. Henrik just got a text from a person from a clinical trial. There you go. Sign up to it, man, and get some free money. All right, looks like we may end the day up green after all. We'll see. I do think I'm going to have to retitle this video, though. I don't think this is going to quite work. Yeah, Casper, look for my look for Adipole in my the hell's it called? In my description of other videos. Yeah, Adipole is a really good one. It's 21:38 in Germany. Okay, so this guy's 8 minutes late to the meeting. I'm about to give up on him. All right, Surya wants a stock market joke. Okay, stock market joke. A long-term investment is a short-term investment that failed. That one's my favorite. Take the L. So user interviews, senior swag buns is there's companies that they want to get feedback from consumers. So like there was an internet company that I'm not supposed to name, an internet service provider, wanted feedback from users of any internet service provider about how they can become more competitive. So Cox Internet asked me how they can become more competitive with other companies, basically. So they wanted my feedback on what can make them better or what can make any ISP better in all regards. And then for sharing my feedback as part of a panel, I got, I don't remember how much it was. It was between $50 and $100. That's pretty typical. I've got one coming up in early February that's paying me $150 for a half hour of talking to them. So there's a lot of money to be made on those. They usually pay you in gift cards. So you'd have to find a way to cash them out or you could just use them. Me and my friend are thinking of making a sound holdings company, investing long-term in fundamentally sound companies. Are we stupid? Are we missing the downside? No, Addy, you're not missing the downside. You're going to get bored. That's what you're missing. $3K challenge video. I started making one, but I stopped in the middle of it because I wanted to make a... There's other videos that I want to make right now, while they're still like relevant time-wise. And the 3K challenge, I can come back to that one whenever I want to. But anyway. Yeah, I'm about to give up on this video here. And on this video, on this meeting. I think the guy just forgot. Damn. That's a shame because that's a. I was actually looking forward to this meeting because it's with a sponsor who has a product that I really like. So, all right. If he's not back in the next couple of minutes, we'll just go back to the market. But anyway. Lee Christmas says, Mikey, my portfolio has been stagnant for 4 months. What can I do? You can freeload and invest it. It's exactly what I would do. So in 4 months, I bet you can make $2,000 off of freeloading and then throw that money into a growth ETF if you want long-term, or you can do a, ooh, that plane, ooh. Or you can do a dividend ETF if you want the income. I guess we can do volume here, can't we? Oh, this one's going to be good. He's going to get laid the fuck out. Oh. Dumbass. Freeload is when you do things on the internet to get paid. Oh, shit. Oh, my God. This guy's got to be terrified. Oh, God. A good dividend ETF would probably be SPHD or SCHD. People go back and forth on which one's better. You're splitting hairs if you're really worried about it. Tobu, I'm very bullish on Lam Research, so I'm eagerly awaiting the earnings report after market. Biggest loss ever is probably Coinbase. I'm down, I don't even know, 20,000 plus. Jeez. Thank you, Sebastian, for getting on board. Add a poll is really good. Free cash, even better. User interviews is right up there with it. Yeah, no response from this guy here. I think he just forgot about me. Oh well. Okay, I guess I'll just wrap up this Zoom meeting. Do you guys want to keep watching fails, or do you want to look at stocks? I'm happy either way, honestly. This shit's easy. I could just be a reaction YouTuber. Hey, Bad Boj, don't do the surveys on free cash. Don't do the, skip the surveys. Go do the mobile games. Do the app downloads. You know, you download a browser, try it out for 3 minutes, they give you money. Skip the surveys completely. You guys want stocks. Looking at stocks is looking at fails. Stonks. All right, you guys want stonks. All right. Thank you, Fail Army, for keeping us amused. All right, let's see. Let's check out what's going on in the markets right now. Stonks, and okay. All right, so what do we got here? What are we looking at today? So they've come off of the Jpow lows. That's good. That's... I love how, you know, Jpow started talking right here at like 2, or at 2, where we have this green candle. The report came out that said we were, nothing dramatic. You know, we had the written testimony. And then 2:30, so right here, Jpow starts talking. So you see the red candle where he spoke and where he started talking about growth will lower. All of a sudden drops right down again. So as soon as he stops talking, we're getting at least some green energy back. Yeah. Anyway, I see some of you guys talking about free cash again. Free cash is great, but don't waste your time on the surveys. There's much more money to be made in other things. Do Mafia Wars is a really good one. What else I got? Mafia Wars, Rise of Kingdoms. Do the ones that are featured. Those are the way to go. Don't even bother with the surveys. It's a waste of time. All right. Anna, thank you for joining. Okay. Old man pushed downstairs. Yeah. All right. So let's see. What does... Let me see. What's the take on Seeking Alpha? All right. Take a high. Crypto has crashed. Is Bitcoin a buy or sell? Okay. So here's some coverage according to Liz Keach regarding Jerome Powell. So he says there's quite a bit of room to raise rates during Fed Q&A, which is true. I think he can raise rates substantially and we'd still be below historic norms. But, oh, here's our timeline. Conference ends. NASDAQ is down 0.7. S&P is down. This is the whole minutes from it. Wow. Did a lot of work on it. Anyway, the key takeaway from that meeting is that Jpow hasn't really made much of a decision yet. And I think they are a little bit worried about harming the equities markets, but not to the point where they're actually going to make it a priority versus getting inflation down, which is the way it should be, but it doesn't exactly bode well for our market. You know, I kind of miss when the Federal Reserve was really excited about keeping rates very low because it would bump the market. And I don't think we're going to get that because their priority now has to be reducing inflation, because inflation is crushing people, me included. I'm not getting crushed. I'm just really upset about not having that kind of cash. My buying power is lower. So anyway, let's open up my portfolio again and let's see. Let's see the damage. It's going to look a lot worse than it did prior. I think when I started this stream, I was up over $20,000 on the day. Now, It's going to be less. Okay. Let's get me open. Okay, so when I started the stream, I was down, or I was up over $20,000. Now, after Jpow has spoken, I'm down over $2,000. And my unrealized gains and loss from the peak to trough, from the peak to now, is about $100,000 in change, which is better than it was a few days ago, but it's still pretty ugly. So what I'm looking forward to after market is the earnings report from LRCX. I think this company is very, very strong. It's going to do well. So I'm happy with that. I've got the covered call way out of the money. I'm already up 75%. There's no reason for me not to take this right now. So I'm going to take this off before the day closes. I'm just going to take that $90 gain and wrap this up. I'm going to put it right into dividend stocks. And then we've also got Tesla. I only own a few shares of Tesla because I was at one point wheeling it. And this was what I bought with the premium. I just bought shares of Tesla. So I'm sitting on them. I don't know what else to do. Should I sell them? Get $933 each? I don't know. It's $2,700. But I'm just kind of sitting on them because I don't know what else to do with them. So, yeah. Hold on. Oh, this is my wife. Stand by. All right, guys, more losses heading our way because my wife has to pay $100 to get her dress altered for her brother's wedding. So that is another $100 in the hole. So basically, the money I got from selling this LRCX covered call is going straight toward paying for alterations on a dress that my wife is going to wear once. So, yeah. Great. And those asking, I'm 31. And I got married when I was 24. That happens normally in the Army. When you're in the military, you got to get married early because otherwise you get split up. That's the thing. Like if you live somewhere, you meet somebody, you don't know, should you try a long distance relationship? Should you get married? Should you break up? You know, you have to move when you're in the military. They'll just send you, 700 miles away. So you got to make a decision. But anyway. Yeah, $100 down the drain. So anyway, I'm going to have to take this loss. If I keep my account up, it's going to show you guys all my account numbers and stuff. So I'm going to do that while I close here. I'm just going to take off. There's really no reason for me to leave this thing open for an extra $10 squeeze in the last 10 minutes. There's just no reason for it. So I'm going to ditch. So I'm going to close, buy to close 1, expiring Friday. I'll buy it for $20. Let's see if I can get a fill here. I'll have made 99.44, so about $100 if it executes and I can get out of this trade. All right, we'll see. It's open. It's not closed yet. There's really not a lot of volume on those pretty deep. There's not a lot of volume on the LRCX trades at all. Great. Now we're down $3,000. So the market has further declined. Okay. All right. There's me. So the market has gone down. Now I'm down almost $4,000. But I'm waiting for a fill on this Lam Research covered call. There's really no reason for me to be holding that there. Price 36. All right, so it's wobbling a little bit. I don't know. We'll see. I'm not going to be too torn up if I have to hold it through the end of the week. The only reason that there's any value at all on this covered call, which is $140 out of the money, is because they have earnings today. That's the only reason. I don't feel like holding this thing until Friday in order to squeeze out an extra $36. I'd rather just take my gains. So I have a limit order entered. We'll see if it ends up filling. Surya, I stopped working on the Dankus Trades video to make this stream. So as soon as I'm done with it, that's when you're going to get it. It shouldn't be too long. It's a really good one. The guy, he traded. That's all I'm saying. Stonked Up, thank you very much for the $2. I appreciate you. And tell me about your new job, because I'm excited to see or to hear what that was going to be. So Addy, I probably was a millionaire for like 2 days. When because this is one account. You know, I've got $500,000 in this one. I've got other accounts too. I think my total net worth at one point was probably like $1,005,000 at the very, very peak, and then that was quickly swiped away from me. As long as we don't go into a bear market, I should still be on pace for it. Anyway, Stonked Up, thank you again for another $2. Man, I don't know what I'd be doing without you. I'd just be losing money. So anyway, cryptocurrency right now, very interesting asset to purchase. I mean, here, I'll pull up my freeloader challenge, my 3K challenge account, which looks a lot worse than I'd like it to be. I'm getting absolutely fucking railed right now. Basically, all the progress from an entire year was wiped away. I'm really not that higher from when I started. But this was good. You know, for a little while I was doing okay. We bottomed out at 1776. But anyway, if we look at cryptocurrencies right now, I can't tell you which direction it's going to go. Stonked Up, thank you once more. Somebody throwing me money. Anyway, but if we look at what crypto is doing, dude, you're a fucking king. You just got a job at Salesforce? Dude, hell yeah. All right, the broker is Merrill Lynch. And thank you again for the other super chat. All right, if we look at what cryptocurrency is doing, I mean, it's going to be up and down. It's going to be all over the place. I mean, I think we're still in a general, very long-term bullish cycle for cryptocurrencies. But what you can do right now, if you want to buy at this point, buy Bitcoin and Ethereum and put them on Ledger X. So it is an exchange. So, you know, be a little bit cautious about how much money you put on here. But you go to ledgerx.com. That's this. You can sell covered calls on Bitcoin and Ethereum. So I've got, I think, 5 Ethereum that I'm selling covered calls on, and I have about 1/100th of a Bitcoin that I sell covered calls on. You can do it in pieces. It doesn't have to be the whole coin. So doing that, you get money in US dollars that you can then reinvest into more cryptocurrency. And if you think about how much the premiums are on a crypto, they're very, very high. Very, very high. So you can continue to sell deep out of the money covered calls. If you're like a real whale and you've got 10 Bitcoin, sell covered calls on one of them at the $100,000 strike expiring in December, and you'll still receive thousands and thousands, tens of thousands of dollars for doing it. So something to keep in mind if you've got that kind of crypto. And if not, what I'm doing with the freeloader challenge, just take my earnings from free cash, from user interviews, from Adapole, all that, put it into Bitcoin, and then sell covered calls on it on Ledger X. And you get good money that way. So that's kind of what's making this happen for me. I think this is how I'm going to fund most of my freeloader challenge goals, is by selling covered calls on cryptocurrency on Ledger X. And that cryptocurrency I'm mostly going to have earned from free cash and from user interviews. Yeah, Ledger X is now owned by FTX. So it got bought out. Now, but if you go to ledgerx.com, it'll still bring you here. Yeah. All right, anyway, let's go back to currency. Let's see how much money I've lost. Market closes 2 minutes. So we can eagerly await Tesla's report and LRCX. Oh, hey, look at that. I'm actually green now. Nice. All right, did I close? No, I'm still not closed on my Lamb Research covered call. So I may not get a fill on that in the last 2 minutes here. The contract size on crypto is 1/10 of an Ethereum and 1/100th of a Bitcoin. But again, just know that it is a hot wallet. You know, it's an exchange, and you know, FTX hasn't been hacked, but there's been hacks on other exchanges in the past. So keep that in mind. You shouldn't be putting tons and tons of money on there. Just put on there something that you're willing to play with, and then withdraw money as you go. Make sure you don't get over leveraged onto an exchange. I have a lot of faith that FTX is going to be fine. I mean, LedgerX is not going to get hacked, but everybody says that until their shit gets hacked. So don't go crazy with it. I trust capital. It's a Roth IRA, strictly crypto. Stonked up on those Roth IRAs for crypto. Do you still have that $6,000 limit? Like, can I put $6,000 into stocks and $6,000 into crypto, or is it just one or the other? Because if it's one or the other, I'm not going to choose crypto over like regular stocks. But if it's both, I'll get in on it. All right, let's see what came back up today. Triple Q is only down 19 cents now, so that's not bad compared to where it was just a little while ago. As soon as Jpow stopped talking, we were okay. All right. Looks like the bell's about to ring, and I'm not going to get a fill on Lam Research, so we will just stick around and wait for Lam Research to release its earnings. I don't know who's going to go first, Lam or Tesla. Yeah, let's keep them both open. I hope my daughter's not awake yet. Ah, shit, she's awake. Maybe not. Maybe she's not awake. I'll give it a little bit more time. Lance, my job I quit the day before my 31st birthday, so I don't have one anymore. I was a cartographer. If I had, Quicks Pineapple asks, $400,000 today, what would I do with it? Well, the first thing I would do is call my broker and find out what the hell happened. But the second thing I would do is I'd put half of it straight up into indexed ETFs, either VOO or Triple Q, depends on which one you want to, and just hold it there. Do nothing else. Now you have $200,000 left over, so I'd pick some stocks that you really like, you're happy to hold on to, and start wheeling them. So out of that $200,000 remaining, I'd take $100,000. I'd probably use Lam Research, honestly. I'd buy 100 shares of Lam Research and start selling covered calls on it pretty close to the money. Take the premium and throw it into something that you can hold long term. And then the other $100,000 remaining, I'd buy some dividend ETFs with a nice low beta. So SPHD, SCHD come to mind. What else? QYLD maybe. Probably a little bit early to go into QYLD with that. PFFD are also options. Dividend ETFs with low beta. That way, if you trade like shit, you're still going to get your dividend. You've got your long-term growth from that $200,000 into indexed ETFs, and you get to play around, look for those bigger gains with the remaining $100,000. All right, so it looks like the bell rang. Did I get a fill? I don't think so. Don't think I got a fill. Oh, I did. Oh, shit, I got a fill. Yes! Last minute fill on Lam Research. Okay, so that means that the stock is definitely going to moon because I sold that covered call in the last minute and got my $99 return. So I am satisfied with that, but now watch Lam. Oh, wait a minute. It would be great if it tanks because I don't have the covered call anymore. All right, so that means the LRCX is going to be flat because I sold the covered call. So we're going to be flat now. Let's see. Prudential is really good. Yeah, get in on Prudential. What else are you guys asking me? All right, Nicholas added QILD and this PhD to his portfolio. Yeah, I love both of those, and you can't go wrong with them. Really good holdings. I mean, the point of having those low beta ETFs. All right, we'll go to Tesla. They're not going to release it like right now, right? What should I look for it on? I mean, they're not going to release it immediately. But let's see. Yesterday. Analysis. Earnings. Here. All right, so we still got the last data up. Announcement days today, post-market. All right, so estimates for it. Estimating 1.81 gap earnings estimate. Revenue, 16.64 billion. I think that's probably what's going to matter more is the revenue. I think revenue is going to matter a lot more than the actual earnings. If Tesla can demonstrate that it's got demand for its product, it is selling, it's beating expectations on deliveries, and it's getting its revenue, I think it'll be just fine. Cameron, just hit the bell. Dude, hit the bell. It'll be all right. We'll get you the notifications. I don't know anything about Deribit OC. I don't even know what that is. I'm sorry. What do I think about shipping companies? I don't know. It's just not my. I don't know. Yeah, I don't know. I probably own shipping companies, but they're all through transportation ETFs, like Jets. I think I own air shipping companies through Jets ETF. And Latchy Cat says, is it is it not more worth to get interest on crypto instead of selling calls? If I thought that US dollar coin was going to give me 9% interest on BlockFi for the rest of my life reliably, I would just sell everything and just buy US dollar coin and stake it on BlockFi. But I don't trust any crypto exchange enough to handle that much of my money. So I'd like to have it spread out into more different places. So that's why I still have a lot of regular equities, and then I have cryptocurrency in a bunch of different places. And I've got in one book, it's a nice blue book in my basement, all of my backup codes. My 16-word whatevers. Zim is a shipping company that pays 17% dividend. It ain't gonna stay that. I'm not gonna stay that high. Tesla YouTube stream. Tesla is at 5:30 Eastern. Yeah, we're not gonna be around that long, guys. Are you guys sure about that? 5:30 Eastern. All right. Let's check LRCX then. Is that the earnings at 5:30 or is that the conference call? All right, upcoming earnings. Why is it 4:14? Beat, miss. In line. So here's this one. Where's the report? It's not out yet. Is it? It's June 2022. September 2021. October. Julian. All right. All right, let's check out the people that are going to see it first are on Yahoo Finance. They're going to give us the answer. So where's my LRCX? Let's check the comments. Shit. I really don't have a lot of crypto, by the way, guys. I probably have about $10,000 total invested into it. Oh, Lamb Research is down $16. Motherfucker. Why? What did it do? What happened? Where's the actual report? Earnings, revenue. All right, so that's another $1,500 lost. Unless this is $21. Oh, son of a bitch. God damn it. All right, forecast, price, share, down 16. I don't actually see the report yet, though, which is a little bit weird. I think people are trading in advance. Tesla's down. Lamb is 5 p.m. All right. Revealed that they weren't actually researching land air mechanics. Ugh. LRCX 5 p.m. conference. Like, I know the conference is a little bit later, but when is the actual report, like the earnings? Because they usually give out their written earnings a lot further in advance. All right. So Tesla's down too in anticipation, I think. All right. Stonked Up gives us revenue is 17.7 billion versus 16.1 billion. Okay, so that's good. All right. It beat on top and bottom lines. Now, what's the issue here? Does it not have good guidance? Or people just expecting more? I mean, that's possible too, but it looks like it is getting hit pretty hard. I wonder why. I wonder what the investor concern is. Is it that they're not growing as much as they wanted, even though they were successful so far? I mean, it could just be that Tesla is pretty overvalued. It is a very, very expensive stock. Its price to earnings is pretty damn high. In the hundreds, I think. But what do we have? Let's see if Lamb has released anything. I'm not going to be around for their conference call, but all right. So I've lost now $2,800 after hours on Lamb. That blows. I don't know what happens if I just Google. All right, Q1 2022. Missed on revenue, beat on earnings. This doesn't have updated information yet. Yeah, it's still old. Anyway, there's high expectations for, I think, all these stocks. So it's not looking great. All right, Tesla's numbers are out. Yeah. You know, I'd be surprised if these stocks stay beaten down after the conference call. It's down $54, Jesus. All right, 3 minutes ago. All right. Thank you, Twitter, for giving us. All right, according to CNBC Now, Tesla's earnings per share, $254 versus $236. Revenue beats as well. And Apple reports tomorrow. Continue without supporting. All right. Fell 5% after the automaker reported fourth quarter results that came stronger than expected. Yeah, it's the market these days for you. Revenue rose 65% year over year. Net income was up 760% year over year. 87% increase in vehicles, up to almost 1 million. Jeez. I mean, to me, this looks like the company is doing great. But, I mean, I guess the market expects a lot out of Tesla. And I mean, they should. But 6% is a pretty big hit. Maybe this is what's tanking it, right? Oh, that's from November. Oh, well. I mean, they're going to have to give some guidance about what they expect with the supply chain shortages, chip shortages, things like that are preventing them from building more vehicles. They're going to have to talk about that during the conference call. I'm not going to sit around all day waiting for it. We'll just wait until tomorrow and see what happens here. Stonked up, dude. I don't know what I would do without you. You are my hero right now. The money that you've given me so far today is going to buy dividend ETFs that are going to pay me for the rest of my life. So you are giving me a lifetime passive income stream. So thank you. AMD is taking Intel down. Yeah, Tesla's doing great, but it's a good product. Price to earnings ratio. I mean, I think Tesla is doing great as a company, but it's priced at the point that it's going to be worth it many, many, many years down the road. So we've got subsidiaries to Tesla that need to perform well for it to be worth its current valuation. But the market is content to price things like that. You know, the market doesn't necessarily look at what things are worth right now. It looks at what Tesla could be worth a decade down the road. I mean, I think it's probably still a little expensive right now, but I would be more surprised if it tanked down to a $300 valuation than if it stays lofty at about $1,000. Yeah, LRCX down 10%. You're fucking with me. Don't even say that. You're playing right now. I'll be very upset. You're right. It's down $60. God dang. What the hell did they announce? Indispensable yet overvalued. Ugh. Really, really ugly. So what did it announce here? Actual Q1. So give me the report. All right, Q1 2021. Earnings of $8.36 per share. Oh, that's last quarter. Man, look at that. Down 9%. Ugh. I don't like it. All right, so it missed on revenue by a little bit. All right, so it beat on... God, the market freaks out over nothing. Freaks out over nothing. Yeah, this isn't going to take me off the... It's not going to make me shy away from Lam Research. I'm still really confident in this stock. This is a little upsetting to see it down 10% like that, but this is such a volatile equity anyway. This is why I sold my Leaps, though. You know, I sold Leaps on LRCX to buy shares of dividend stocks. And this is why, because, you know, we have a year and change of Leap income just gets evaporated away, and the expiration date is now a year closer. Versus with shares, there's no expiration, so you never have to worry about it. Let me see, tip ranks, market beat. Let's see if they've actually announced anything. All right, actual EPS. Yeah, this doesn't have the 2023 numbers yet. Average estimate, low estimate. Yeah. Well, that's all right. I'll stick around and wait for it. Yeah, I think Stonked Up said it nicely here. He's saying that the what's really happening is a rotation out of high price to earning stocks, rotation out of growth and going into value. And I can see it. That's why I like to keep a blend of both. I'm obviously a little bit upset with Lam Research and all its growth stories not getting the appreciation that I think it deserves from the market. I think Tesla shareholders are going to feel the same way right now. I'm sure Triple Q is having a ball. All right, well, Tesla came back a little bit. Still down $40 though. Yeah, it's going to come down now to a lot of what the companies have to say during their conference calls. You know, we're hearing 5 o'clock, 5:30. They're going to have their discussions about the way ahead. Issuing guidance is really what matters. Now, if Tesla comes out and says that we're expecting our supply chain issues to alleviate in 2022, that would be really helpful. And I think if Lam Research can say that we're already in talks to acquire or to provide material for companies building their plants in Arizona, that would be fantastic too. I don't know if they're going to give us that. I don't know if they can give us that. But I think at this point it would take that type of thing to save these downturns. Just don't be down more than 10%. Motherfucker. All right. Where's your generosity come from? Because it knows no limits. Thank you very much. He must have puts. Stonked Up's got puts. So, all right, what else we got here? What am I going to do to recover my $5,000 loss on Lam Research? All right. Well, I got 100 back from selling the covered call. So we're going to knock that down to $5,400 loss. If I do user interviews for $100 each, which is a high estimate, that would be what, 55 user interviews? That would probably take me about 2 years. Nah, less than that. Yeah, about 2 years. So at the end of 2 years, so at the end of 2024, at the beginning of 2024, I should have recovered this by just doing user interviews. So we'll be all right. Oh, Stonked Up does not have puts, but rather he's cash gang. That's great. And yes, also plasma. Somebody here mentioned plasma again. If I were able to sell plasma because I had a center near me, then it would only be about 10 months that I'd be able to get my $5,000 from Lam Research back. Alternatively, the stock could go up. That would make it much, much, much better. That would be a lot better. But anyway, yeah, I don't think that the U.S. is going into a death spiral, but this is not boding well. The fact that we have companies beating on earnings and still dropping after hours, that doesn't show that there's a lot of strength in the market right now. It says that people are scared, they're nervous. Traditional advice would say that this is the time to buy. Be greedy while others are fearful. But it's very, very tough to do that. So I'm targeting right now Energy Transfer for a long position. I've got about 220 shares now. I'm probably going to do some more pickups. I don't think the company has ever been in a better position financially. It's really liquidated a lot of its debt, or I shouldn't say liquidated. It has paid off a lot of its debt. So it's in a much stronger financial position now. It's still paying a 7% dividend. The company financially restructured a lot in 2020, and now it's finally on better footing. So after getting pummeled for a little while, it was down to the $5 range in 2020. It did a lot of restructuring, built itself back up. I think it's now at a pretty good buy price. Not a great buy price. I'd love to get in more below 9, but I think we're going to go back above 10. And you've got a 6.5% dividend right now if you buy at this point. So good pickup right here. And I like SPHD. I know a lot of people like SCHD better. It's splitting hairs if you pick one or the other. It's no big deal. You get a little bit higher yield with SPHD, but the fee is higher. You'll get the expense ratio 0.3 versus SCHD. You get 1% less yield, and it's a much lower expense ratio. So you were like really close. Barely even a difference. So just pick one. What do we got in the comments over here? Energy Transfer is a nice small account wheel. Yeah, I agree with that. Give Mikey money. Holding up. Stonked Up. He's holding some trading companies and energy. Never sell FANG stocks. Only a small portion of crypto. Yeah, I'm with you. Tesla's down 4. All right. What'll it take for another huge drop like March 2020? I think it would take more lockdowns across most of the earth to get us into another 2020. And even then, people are going to be ready to buy the dip. I think a lot of what's melting the market right now is people realizing that we're not in 2020, 2021 anymore, which means that you can't just pick a stock. You can't just throw a dart at a board, pick a stock and buy it anymore. It's going to be more of a stock picker's market. You have to know what's going to add value every year. And you don't know what you're going to get when you buy some of these meme stocks. Maybe they're going to grow, maybe you know that, but you can't just predict that any stock across the board is going to start gaining in value. A lot of people are going to get shaken out. I think a lot of people are selling now to try to get off that bandwagon of I can buy anything and it'll go up. So people are rotating out of those speculative investments and into the value investments. So that's where you get things like Triple Q, which has a lot of those high price to earning ones. These come off. This loses value. Even more so, you're getting stuff like what's like a super ARK innovation, these ETFs, all the ARK ETFs where it's really, really oriented toward growth, getting pummeled right now. And I bet you if we start looking at the real value-oriented ETFs, they're doing much better. That's why the Dow is doing really well. Anyway, Kevin L says the market has been overvalued. Lots of irrational exuberance. Correction period is good long-term market health. Yeah, I agree. It also kind of sucks right now. But, I mean, I think you're right. We need ups and downs. You need things to go down so that they can go up later. You need rotations out of these meme stocks and into real value. So I can get on board with that. Cameron says invasion of Ukraine could cause another 2020. I don't know. Maybe. I think the war stocks will do well. Maybe now is the time to buy Lockheed Martin. Bethany says lithium sucks. I don't like that she said that. Lithium sucks. Natural gas is going to be where it's at when Russia starts withholding oil. Oh, interesting. Yeah, lithium does suck right now. I agree. I think it's got a very good long-term story to it, but my lithium investment has been performing like shit. I bought in the 90s. Now it's at 77, so we're going... I mean, the demand for lithium as a mineral shouldn't be down, but the companies that are inside them, a lot of them are focused on China. Like, we look at the holdings for these. It should give us... Albemarle is the biggest, of course, but all these Yunnan... A lot of these are Chinese. Ganfeng Lithium, so the Chinese stocks getting pummeled are bringing this ETF down. What I really wanted to do was invest in the mineral lithium, but I tried to do it with an ETF and I screwed up. But lithium, I think, is still a good investment. Maybe not in the not in the immediate term. Yeah. Buck Star Chaser says his lithium is mooning, whatever that means. All right, Flaky says, to me and Bethany, Russia just finished building a massive liquid natural gas plant in a collaboration with China, France, and South Korea. It's in the Arctic on the Yamal Peninsula. Okay, so liquid natural gas. So are they going to withhold that too from the rest of Europe? I haven't been paying attention. I used to pay attention to all this stuff when it was part of my job. Now I'm really only paying attention to Jpow, and that's easy. You just listen to him beat the shit out of your stocks. Dr. Botnet, thanks for the support. And hey, I am still working on the Dankest Trades video. Right now, I stopped working on a Dank Trades to make this live stream for Jpow. So don't worry, it's not going anywhere. The one I'm making right now. Do you guys want a spoiler? I'll tell you a little bit of what happens in it. I don't want to give you the fun details, but I'll tell you a little bit if you want that. All right, so Tesla beats on... Oh, here we go. Let's check them out.
Welcome back to Yahoo Finance. Well, stocks are taking a big hit at the start of a packed earnings week, with Tesla being one of the companies reporting its quarterly earnings this Wednesday. Here to help break down what's in store for the EV giant is CFRA Research Senior Equity Analyst Garrett Nelson. Garrett, thanks so much for being here. What do we expect from those earnings results? I know for the previous quarter, revenue came in at $14 billion. And then what is the outlook for revenue going into the rest of the year and perhaps next year as well?
Well, thanks for having me. You know, all signs here point to another very strong quarter for Tesla. We know what their production and sales were for the quarter in terms of vehicles sold. That came out a few weeks ago, and it was a record high quarter for Tesla. So they've also gotten really good at beating consensus. So Tesla has now beat 8 of the last 9 quarters. So, but we think with the record quarterly production and the sales that they posted for Q4, that really bodes well in terms of their ability to beat, just given the high fixed cost nature of auto manufacturing. When you have a quarter and when you have such strong volumes, that tends to really drive down unit costs and gives them a lot of bottom line leverage. So we're expecting another very strong quarter, and really investors will be focused on what guidance they provide in the release.
Gary, you have a buy rating on Tesla right now, 12-month price target, $1,250. What do you see as possible headwinds to that target and to that rating?
Yeah, the stock's really pulled back significantly since the start of the year, and it's this broader sell-off in the higher growth stocks. A lot of tech stocks have sold off. Tesla trades more like a tech stock than an auto manufacturer, so we really view that as a buying opportunity. In terms of headwinds that we're looking at, it's
LRCX
really
still down 10%.
Consistent with what the headwinds that are facing all auto manufacturers here, which is supply chain issues and semiconductor shortages. But Tesla's done a very good job navigating those headwinds, and we think there's potential upside to
Whoops.
consensus
Like
number.
all this stuff about
With their 2 new
semiconductor
factories
shortages.
starting up.
Where is Lam
The
Research?
startup of the
Where
new
are all of
factory in
the
Texas is
there
now imminent.
factory in Texas?
And then the
There we go.
startup of the new factory in Germany will be coming probably in the second quarter. So, we're very bullish on Tesla. We look at consensus numbers, and those 2 factories will essentially double Tesla's production capacity when they come online. So it's a big event, and we think the company will provide more information regarding their longer-term growth plans beyond this year. Remember that the company has a long-term growth plan to grow their annual volumes by a factor of 40 in between the years 2020 and 2030.
And Elon Musk sat out the last earnings call, so I wonder, does he sit in this time? Because a lot of people are very interested to learn about vehicles that are down the pike, particularly things like the Cybertruck that was supposed to sort of go into production this year.
So it's rumored that he will be on this call. So we view that as a positive factor.
This guy looks like he's on the struggle
he's
bus,
not going
man.
to be on the call if it's if there's no good news or no new developments to report. So we think that's another reason why we're bullish heading into the quarter. As far as the Cybertruck, that's been a concern recently regarding the story, but the company's rumored to have upwards of 1.3 million reservations for the Cybertruck. And even if it's been pushed into early 2023 as far as first production, we think investors are willing to be patient. And that reservation count is very bullish when compared to
My
some
man
of the
needs
other
a shower.
EVs, such as
God, he's
Ford's
struggling.
F-150 Lightning or GM Chevy Silverado electric. So we're very bullish on the Cybertruck, as well as the Semi, which will be coming fairly soon.
I know that for the first time, Tesla plans to produce its own cells to support its electric vehicle production. How might that impact the company going forward? And I'm thinking specifically
Both of them
about
just
what
look
those costs
exhausted.
might
man.
mean in real terms to Tesla.
He's a Tesla bull.
That's an area
She's
where
reporting
investors
market
are really
information.
looking for
God,
more
they're struggling.
information. Since Tesla held their battery day several quarters ago, they really haven't provided an update as far as their plans and how they're progressing in terms of producing their own battery cells. We know that over time, they have a plan to reduce their battery cost by over 50% and increase the intensity and power of those battery cells. But I think that's definitely an area where investors are looking for more information from the company.
And then who is Tesla's biggest competition? Is it players like Rivian and the EV space, or is it more from legacy car makers?
That's a good question. It's really all of the above. We view Tesla's closest comp in terms of the specs of the vehicle, the quality of the product. Right now, we think that's Lucid. The Lucid Air, really has comps that are really on par or maybe even slightly superior to a Tesla vehicle. The rumored Tesla's been rumored to have developed the Model S Plaid to compete with the Lucid Air, but incumbent traditional automakers have numerous EV models that you're going to be seeing on roads later this year and more so next year. So, and
He's
really
going to
the
work at
traditional
Wendy's.
automakers have increased their investments that they're dedicating towards EVs dramatically over the last year. So, it's going to be a mix of both traditional automakers and upstarts such as Rivian, Lucid, Fisker, and others.
All right.
Do you guys think that any of these other ones are really competing with Tesla?
Results out on Wednesday. Garrett Nelson, CFRA Research Senior Equity Analyst. Thanks for stopping by today.
All right. Well, there you have it. So the guy with the grease in his hair is all about Tesla right now. All right. Comma is asking me how much profit did I make in total from trading until today? When I started? I don't know. I don't know, man. Right now I have unrealized income of about 140,000. So I don't know, maybe $250,000. I'm just guessing. I could be way off, but I don't know. I've made a few $100,000 from trading, but I've been trading since I was 18. So at some point in there, I should be making some money. Otherwise, I need to find something else to do. But you guys have asked several questions about me during that time. If you guys want me to, I can just talk about me for a little while. just ask me questions. I'll be happy to answer them. But some of the ones that I saw coming up, when did I start investing? I was shortly after my 18th birthday. I had a really good high school teacher who we played an investing game in class, and everybody lost all their money, including me. So that's when I knew I was going to get involved in investing and actually do it right. So once I started with real money, it was the crash of 2009. So I bought, how was it called? Freddie Mac. Fannie Mae actually is what I bought during the crash. So I lost money there. But then I bought its corpse after that and made a couple $100. So anyway, I started early and I just kept investing, and it's more of an addiction than anything else at this point. So I just really like it. I grew up in New Jersey. I'm Italian of background. I thought I would I did a 23andMe, and my ethnicity map was like a map of the Roman Empire except for the UK. So I was really proud of that. I'm Roman to the core. I have a lot of land to conquer in my life. But I think my best investment ever has probably been in indexed ETFs. And then some of them I'm really proud of are grabbing Prudential at a really low price. I'm happy with that one. What else? And grabbing Apple at a very low price. So Apple, Prudential, and the indexed ETFs have probably been the best investments. The worst one ever was Coinbase. I completely screwed that one up. I was so confident that Coinbase would make money on the way up or the way down for crypto, but that just went to shit. So I've probably lost about half my investment into it, a little less than half of my investment. So figure probably about $20,000 lost on that one play. But anyway, I joined the military because of 9/11. So I grew up in New Jersey, so I could actually see New York City on 9/11 from my house. And if I went up on a hill near my house, I could actually see smoke coming across. And a lot of the people I knew in school, I was 10 years old. So a lot of the relatives of the people I went to school with had died. So I joined 9/11. I joined the military because of that. And then my very last thing I did for the military when I was working at the Pentagon I had gotten out of the military. I was working there as a contractor at the Pentagon. One of the last things I did was watched from the inside as we lost Afghanistan. So that's the full arc of my military service. But all right. Anyway, did I get Tesla early? No, I didn't do that. How did I miss Amazon? Because I'm an idiot. What stock am I in that I would hold for the rest of my life? Triple Q, Coca-Cola, Prudential. Those come to mind. Indexed ETFs are still a great way going forward. Yes, you can't lose with indexed ETFs. Why did I leave the Army? Because I had a baby. That's why. Imagine showing my professor. I actually did talk to my professor a couple years later, the one that had showed me that investing game in the very beginning. I showed him what I was doing, and he was like, yep, whatever. Hey, look at you. You're in your uniform. He didn't care at all about my stocks. I was a little bit disappointed. Pentagon, oof, buying coin, saw the towers fall from elementary in Queens. Oh, Eduardo, yeah, you were right there with me. Are there any stocks that I regret not buying? I'll tell you, I regret selling Google, Goog. I sold it during the crash. I was selling covered calls and got assigned. So if we go back 5 years, this candle, this dip right here, I had bought, over several years since 2017, I was building up a 100 share position so that I could sell covered calls on Google. When I finally got 100 shares, it was the crash of 2020. So I sold about $1,300 just as we were recovering from it. And I missed out on all this additional gain. So with 100 shares, you figure I would have had $250,000 of just Alphabet stock. Instead, I mean, I got assigned on the covered call on Google and bought Triple Q. So it's not the worst thing in the world. I did make some money from that, but I missed out on doubling if I had just held Alphabet. And what else did I know there were a couple more that I could have had tons and tons and tons of money. But you don't dwell on those. You look at what you did right, and maybe next time you say, why I didn't just hold Alphabet is because I bought into too much of the fear. Somebody's saying that LRCX is green right now. I don't know if I believe you, but let's see. Lobo says, if I was starting right now, yeah, somebody's lying to me. LRCX is not green, you motherfucker. Lobo says, if I were starting right now, brand new, what would be my first move? I ask this because that's my position right now. So I would pick an indexed ETF, VOO. Here's what I would do. So if you're starting right now, all right, you have some money, you want to get some more money, buy as much VOO as it takes to get $6,000. So basically max out your Roth for the year of VOO or Triple Q or SPY. Pick one. Just you're splitting hairs if you compare them too much. Then your next move, I want you to get 100 shares each of SPHD or SCHD. I know everybody hates. You can start a war between the Catholics and Protestants if you start talking about SPHD versus SCHD. They're the same freaking thing. VYM is another one. Pick a nice dividend ETF like this. Buy 100 shares of it. And if you don't have enough money to buy 100 shares, work and freeload until you can get 100 shares. You have just made yourself a lifetime stream of income off of this one thing. All right, then get 100 shares of QYLD. All right, this one does not grow. It's just income, but you get like a 12% yield on it. All right, once you have 100 shares of both, so you're at about $6,000 and change now. Now I want you to get $6,000 of Vanguard. All right, max out your Roth with Vanguard, S&P 500 ETF, or Triple Q, whatever it is, and then get some of those dividend stocks on top of it. Now you've got growth. Now you've got dividend. Now whatever you do from here on out, you will not trade like shit anymore. As long as you don't touch these. You can trade like shit elsewhere. Lose your money on Peloton. But don't be tempted to sell your dividend ETFs. Don't be tempted to sell your growth ETFs. Do that. What else we got in here? Do I hold SPAF? So I never actually held SPAF. I guess I didn't do a good enough job of kind of caveating my speculation here. When I made that video, do I regret it making that? I don't know. I thought I did a good enough job of telling people, hey, you are gambling on whether SPAF can sell its company or not. Or if this, the hell was the thing called? EcoSolve. If its EcoSolve thing was going to be effective for the mining lithium. But now, I didn't do that. I didn't give you guys good enough. And I'm glad that nobody bought a real big bite out of SPAF. But I know people did lose money on this. And, that's up to them. I'm not going to say blood is on my hands for telling people this company is sponsoring my video. They're paying me $1,500 to say what I'm about to say. And then saying it. I don't know if that was really my fault or not. But I'm just glad nobody actually went deep in on SPAF. And that kind of did teach me that if I just say shit, people are going to listen to me. When I say do your DD, people do that sometimes and sometimes they don't. Some people just, I had people texting me from real life that are like, yo, how do I buy SPAF? I'm like, come on, man. Did you hear what I just said? They paid me to say that. But anyway, I'm not doing endorsements like that anymore. But I'll just call that a black mark on my record. Anyway, let's move on from that. All right, Anthony, thank you for your service. Yes, do your TSP, 100%. Why not SPY? SPY has a higher cost ratio than VOO does. So if you're just buying and holding, use VOO. But it's super similar. Don't worry about that too much. Do you think there's another bottom? I need a video on which thing. I'm not sure which one you're talking about. Do I drip QYLD dividends or use it to buy? So I drip all of my dividend ETFs right now. If I ever come off of that, I'm probably going to be reinvesting into other dividend stocks or maybe into Triple Q. And then what brokerage do I use to hold all my ETFs? So pretty much, I'd say about 90-something% of my portfolio is in, not 90%, let me say. About 85% of it is in Merrill Edge. That's a full service broker. It's not free. You pay 55 cents per every options trade, and you don't pay anything for stock trades, which is good. And then I've got a little bit in Robinhood for the 3K challenge, and I've got Webull. I opened up Webull because I wanted to use their what's it called? The IPO thing, and the IPOs ended up being completely shitty. I had some luck in the beginning, and I made some money there, but then all their IPOs after 2020 just were complete trash. But I mean, I still think Webull is fine. You know, it's a little bit higher of a tier than Robinhood, but not by much. I mean, they're super similar. What video is sponsored by SpayF? Don't even look for it, Aiton. It's the one about lithium, actually. All right, Sweetface Lola says, if retailers were smart, they would go from stock to stock of shorted small caps and catch each squeeze. Nah, get out of here with that. Come on. Don't be ridiculous. There's no shorts. Like, people are thinking that these stocks that are shorted at 10% are going to go up 400% because of that. Like, it's just not going to happen. Like, we don't have enough of the float locked down as retail traders to actually control markets like that. GameStop was all the stars were aligning. AMC wasn't even a short squeeze. That was just a shit ton of people buying stocks. All those other ones, like Clove, was not a short squeeze. It was just shit tons of people buying stock. It wasn't squeezing hedge funds out of their money. It just didn't happen. So get out of here with the idea that we need to focus on short squeezes. It's no good. I actually don't know what VOOG is. VOOG. What is VOOG? Growth ETF? I don't know what this is. This is like the growth funds within the S&P 500. I mean, they're probably very similar to each other, but I like the stability. What's the beta on this? So beta is 0.98. These are probably basically the same thing. It doesn't sound like it's really a big difference. If I have an 401k for your work, it's with a company like Voya. Yeah, that's what I have. I don't know much about Zilnix, but I know it's about to get purchased out, right? They're about to get bought out. All right. If anybody wants to play small cap short squeezes with Sweetface Lola, you can check out her channel. All right. And hey, oh yeah, by the way, all I want to say about this whole SPEYF thing, all I'm saying about it, let's see. When I did that video, let's see if they can actually give me a chart here. When I made that video, that was more than a year ago. Shit. All right, whatever. It was it June of 2021? Or was May? I think it was May of 2021. It was about 24 cents. All right, I made it about here in May. And then all I'm saying, it did go up, but y'all needed to ditch. So Michael F. did the right thing. He actually made about 50% on it. So you get wheelies. If you're lying to me again, I'm banning you because you keep telling me that LRCX has gone up. It's at break even. Oh shit, you're not lying to me. All right, you're not getting banned. All right. No, Sweetface, I'm only teasing you. Now Lamb Research is back down. No, it's I mean, there's probably some fun to be had with those short squeezes, but realistically, it's not. I just don't think there's enough there to actually say that a lot of these so-called short squeezes are actually short squeezes. I think they're just a ton of people buying stocks. But if you find like some really low float stock and all of a sudden it's primed for a short squeeze, be very skeptical because a lot of times it's a pump and dump. You know, you find that on TikTok and Twitter all the time. But anyway, I'll take a couple more questions and I gotta wrap it up here. So let's see. No more comments. I just want to answer what's on here. So LRCX didn't actually rebound. I'm very upset about that. Am I still buying coin? No, I'm just rolling my short put position. Brokers in Europe, I got nothing, man. I don't know anything about brokers in Europe. What percentage of my portfolio is index funds? Probably about 30%. Addie says, do I need the money anymore? Do you still have some financial goal like buy a home? So I have no house. This is a rented house. I wanted to buy it, but the landlord wouldn't sell it to me. So that was disappointing. We're looking for a house right now in South Carolina, so we're going to have to move. And that might be, $750,000. So yeah, I definitely still need to make more money. Spy Day Senses says, I learned investing in crypto due to your video. Literally free money #1 about Coinbase. Helped me make some money, so I want to say thank you. Well, thank you, Spidey Senses. I'm glad that worked out for you. Sell Theta Gang clothes. Dude, I wish I had the freaking... Damn it, it's gone. If Firenance were in here, I'd ask him to drop his link. So all this hat and some other ones, like this one, these are all... This Theta Gang merch is being sold in somebody else's store that I send people to. but nobody wants to buy mine. It's disappointing. What's in the barrel behind me is empty. It was a wine barrel from Italy, but we never filled it back up. How do I feel about Lockheed Martin? I think it's a good one. Just hold that one. Crypto opinion. That's a really broad question, but crypto is good for selling covered calls on. We're getting to the end here. Any new freeloading offers in January? Just do user interviews, free cash. Check out my pinned comment on free cash. This is a really good one. I love that one. So that's my referral link there and the free cash link. Do that one and you'll make money off of it. And then do userinterviews.com. You'll make money there, and then add a poll when you need a quick boost. All right, that's it. I'm not taking any more questions. If it's on the screen now, I'll do it. Otherwise, not. My favorite non-ETF stock, Apple. Do I own? I don't know what a C3 AI is. What do I do for your main job? This is my main job. I quit my cartography job in 2021. Yeah, December of 2021. Do I like credit spreads? No, not really. I like the naked options. Thanks for the stream. Love the convo. Got put money in there or something. All right. Thank you guys. Thank you all for joining me. And those that actually stuck around the entire time, I appreciate it. This has been, I think, the longest stream I've done. But we kept a pretty steady number of viewers. So thank you guys all for joining me. I'm working on a video now for the next Dank Trades. A guy traded. That's all I'm going to say. He traded a lot. So I'm going to make the video on that as soon as possible. Tomorrow's family day, but I'm going to try to finish over the weekend. And then what else? I'm still doing the 3K challenge. That hasn't gone away. And I'm doing the freeloader challenge. So those are the series I'm focusing on. Anyway, all right. Thank you guys. I'll see you guys next time.